Good morning, welcome. My name is Tim Lozott. I'm your host, as well as the CEO and Managing Director of GreenTech Capital. So we're a private money advisor for ultra high net worth individuals and family offices with $500 million to deploy in commercial real estate and working capital business loans. But more importantly than that, I want to thank you for joining us today and taking time out of your schedule. And we have an exciting lineup of speakers, investors, CEOs, and industry leaders who are presenting both educational content as well as companies who are seeking capital that are presenting to our audience of investors here today. So these companies are emerging growth companies in various industries, including technology, innovation, ad tech, health tech, EduTech, digital media, Internet of Things, medical cannabis, and consumer products improving the human condition. Today, I'm joining you from Las Vegas, Nevada, where it's sunny 360 days a year and always full of excitement. We have participants from around the world, all around the globe, from various time zones. So whether it's sunny or dark, early or late, thank you for joining us here today and taking time out of your schedule. Right now, I'm gonna walk you through the schedule and some of the housekeeping. So all the times that I mentioned are in Pacific Standard Time. So we have our speaker lineup starting at 8 a.m. to 9 a.m., followed by our companies who are raising capital from 9 a.m. to 11 a.m. From 11 a.m. to 12 p.m., we have a separate networking meeting where you'll have a chance to meet with our CEOs and company leaders. The meeting link will be provided in your chat, and you will not need to register to join. However, please don't click on that link too early or you'll leave this webinar and be taken to a separate networking meeting. At 10:50 a.m., you'll have an opportunity to vote on who you feel gave the best presentation, and there'll be some closing remarks while your voting is going on. If you'd like to submit a question to one of the companies or a few of our speakers, or if you just have a support question, use the Q&A chat button at the bottom of your screen. You can submit this question either with your name or anonymously. These questions will be answered audibly unless it's a support question. The questions are only going to be considered after each presenter has completed their presentation. Right now, you're currently in a Zoom webinar, so you're not going to be able to raise your hand or chat amongst each other as those functions have been disabled, and we cannot see you on camera. Only the presenters will be unmuted and on camera when they're presenting. When we join the separate networking meeting later, you'll have an opportunity to be seen and heard if you wish. Again, reminder, don't click on this link too early or you'll leave the meeting and you'll join the networking meeting. I do recommend that you do that just a few minutes before 12 noon today. The bios and company information from the presenters that you hear today are going to be available on the Linked Ventures website, and a link to that site will also be included in your chat. Also, mark your calendars for some exciting upcoming events. For those of you who need an excuse to get to Vegas, we have an in-person and live online event December 10th through the 12th. And on October 29th, there's an Investor Hot Seat webinar. In just a few days, on September 29th, there's a hemp opportunities pitch competition and webinar. Well, I will also be an investor judge. Other Linked Ventures investor summits and spotlights will soon be announced. All of these are going to be posted on the Linked Ventures website, and we'll also email you some information as well. Today, our Master of Ceremonies, whom I'll turn it over to soon, is Konstantin Dubovitskiy. He's head of investor relations at Make It Studio, where they're professional startup builders using their strategic and execution capabilities to create and grow tech startups on a daily basis from idea stage to Series A. I also met with Konstantin recently with Fundraising Radio, where he hosts a podcast that interviews venture capital and angel investor leaders on a regular basis and broadcasts to an audience of over 4,000 entrepreneurs, founders, and early stage companies. But before I turn it over to Konstantin, I would like to let you hear from our sponsor today, TribeHerald, which is led by Yitz Jordan, better known for his stage name, Why Love. He's an American hip hop artist web developer, activist, and entrepreneur. Yitz can rap in 6 languages. And he has been covering social, political, and religious themes and is about to turn media upside down. Again, thank you for joining us and taking time out of your schedule. I'll see you later. And with that, Mr. Yitz Jordan from TribeHerald, would you please join us?
Good morning, and thank you. Good morning, thank you for joining. I'm Yitz Jordan, the CEO of TribeHerald Media. And there we go. Good morning, thanks everyone for joining. I'm Yitz Jordan, the CEO and co-founder of TribeHerald Media. And I'd like to introduce myself. I'll just share my screen. Beyond what the fetish is, business, business, new school religious, kicking vision, imitating wisdom, pictures, people wisdom, exchange the low position, build a rhythm with a mission, internalize eternal files, protect from dereliction, destiny, condition with strength and benedictions, go on, take more than billboard to charm me, divine fire detector trying to check what a spark speed, forecast, black hat, no chance of forming, coming live on your wire, this is not a recording, this morning, coffee smelling, new style and belly, with no beef, all kosher, got the mustard with relish, Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. When I say revolution, you say excuses. Why love the new scene? The old scheme is useless. The fine sun infused these no season fluid shows we prove it. You know we do this for the last time. I'm trying to change minds. Check why the best rhyme. Sent across electrons. Bend your mind like Bendy. I got base days for Cellucon. Intersect the intellect. Forget it if I said it wrong. Militant mystic under rabbinic authority. Then we got the supervision when I enter the party. The task is elevation. No time for division. Unify the creation. Redefine the mission. Open up your third eye every time you listen. When you bounce, you move closer to the new definition. They said they understood me, but I know that they didn't. Cause if they did, they would know this is not just religion. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Hashem began routine like machinery. Half these years living in the media chicanery. It's plain to see no man-made thing changing me. Corruption in the function. I'm gonna bring the hate blatantly. Basically, revolution. Time to drop the handy cam. Known to bless the cipher till we light it up like Amsterdam. 613 for life, screaming till Mashiach comes. We pass bam. We're trying to make the people one. Feel the age spots on the pivotal moment. Connected to the most high. How we letting them control us? Believe in the people, manifesting the skills. With knowledge, understanding, wisdom, and will. Develop the heavenly culture. With the shack and fit it connected, bring it together, bring Shemayim in the Eric. Say we in the house, we trying to pray in the field. Wild love and D1, put the club on till. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Olam Echad, Hashem Echad, Ha'am Echad, this is unity. Hope you enjoyed that, and for more about us, what I'm doing and what we're doing and how we're changing the world of media, stay tuned and check us out later. Thank you.
All right, so my schedule tells me that it's time for me to kick in. My name is Konstantin Dubovitskiy. I'm the master of ceremonies for today's meeting, and we're ready to get started. Now it's time for us to present the first speaker, who's going to be talking about what's poised to disrupt the venture capital. His name is Sergio Marrero, and he's the managing director of Rebel One. So Sergio, the floor is yours. Take it off.
Hello, thanks for having me. My name is Sergio Marrero. Can everyone hear me? Hopefully everyone can hear me. I was just made a
clear.
Perfect. All right, thank you, Konstantin. So Sergio Marrero, I'll talk about today about disruption in venture capital, managing partner of Rebel One. We're an investor network, an investor training program, and a syndicate. We backing the Rebels, early stage founders. But a little bit about my background. I have over 10 plus years of founder experience, TEDx speaker on different topics, covering at the University of Princeton, and run a live stream series where I interview a number of VCs and CEOs every week, and highlight them, and have been connected to a number of accelerators. Where this research started was at my time at the Harvard Business School and the Kennedy School of Government. To share more about that, what I did is I was looking at in the beginning, I was trying to understand how do we accelerate ventures that are really making a positive impact in the world, and then it took some time to do my thesis on startup studios. So there are these factories that are outputting startups at a rapid rate. And back in 2015 timeframe, there weren't many of them around the world, and now there's many more. But that's how this initial research started, focusing on how to innovate in venture capital. To share a little bit a story of how venture capital has not innovated as drastically, I show you this image of the whaling industry. The business model of venture capital actually stems from the 1800s, from the whaling industry, where a venture capitalist would garner money from wealthy families looking for a different return on their investment, and would bring that money together to back the entrepreneurs or the captains taking out several fleets of ships in order to hunt whales and bring them back. And the term and how they got paid, the venture capitalists, is they would get a share of the profit or a share of the carry. Carry comes from the term, it's the share of blubber that they can carry, whale fat, off the dock when the ventures were to return. So these risky ventures in venture capital in the 1960s really modeled after the whaling industry of the 1800s, and the business model of just taking share of profit and investing in early stage ventures really hasn't changed all that much. So just to share, it's a little ironic that we back early stage ventures that are innovating and pushing things forward, but aren't innovating and changing ourselves. And I'm going to share a little bit with you on what trends are disrupting venture. In order to do that, I use the framework from Clay Christensen, who was a researcher, and he was a professor out of Harvard Business School, and he created this diagram that showed, how over time you have performance on the left, and over time it goes up, and you have these different qualities of performance. And the disruptive technology in the beginning isn't good enough to meet the needs of the low quality needs of the market, and then again over time goes up to usurp the current competitors. And to give you a real example of that, out of Clay Christensen's research, he talked about mini mills. So the concept of mini mills were steel mills used to take billions of dollars back you talk about the mid 1900s to create steel, different types of steel, rebar that goes into construction, angle iron and structural that supports buildings, and then sheet steel is the highest quality where it's thin layers to make cars, right? In the beginning, these mini mills were a couple $1 million instead of billions, and then over time they got more and more efficient. The steel became of higher quality, and they usurped the current large steel mills, and then the whole steel mill industry really collapsed, and the mini mills replaced all the other steel mills. You might say, okay, I'm not familiar with steel mills. What are other examples? I'll rapidly go through them. You think of cell phones. In 1985, that's when mobile phones first came on the scene, and over time they didn't have the coverage, as current phones do, and eventually proliferated to today to replace, even in other countries that didn't have access to, call it, the internet and prosumer devices, have proliferated and really replaced landline phones, and in some places are replacing computers in some countries, right? You talk about Netflix. In the beginning, they just delivered DVDs, and then over time, created online streaming to even usurp their market and disrupt it, and now have challenged major content houses and media producers across the world. So that just gives you a sense of how the disruption model, works. So the real question is, in venture capital, what are those rungs of quality, right? And what is poised to disrupt it? So first, there is providing capital, period, right? Then you have venture capitalists that also, they not only provide capital, right, but there are some others that are providing marketing, media, support, this customer discovery and development. The next rung are the support services, right, where angels probably land in the customer development and discovery. The next support services are really small, venture capitalists to larger stage venture capitalists. And then you have the larger funds that provide multiple rounds of support and a suite of services. And the question is, what is poised to just not only provide capital but increase over time? And I'm going to share some of those with you today. So first, I would say an example, a trend happening right now are rolling funds. These are what they're doing is they're increasing the speed at which early stage fund managers can create a fund and deploy it to early stage founders. Even though the number of early stage venture funds has increased from about 100 to about over 1,000 in the last 7 to 8 years, this will increase the proliferation because LPs can sign up and subscribe to a fund, not necessarily dedicate over a 5 to 10 year period. It's a shorter horizon, and it's a very it's just an easier structure to execute. Next, there's another trend of venture studios. These are funds and then also product development houses that are rapidly launching products that each stand up as their own startup. What they're able to do, because they're providing all that, they're increasing the speed and also the support, they're able to take a larger chunk of equity, which increases the return on investment. They are risky and require specialized knowledge, but this is another trend in the space. The third and the last that I'll talk about today is crowdfunding. Even though people may shy at crowdfunding, this is they're probably best poised to disrupt venture capital. And to give you a sense of that, they are even innovating on the model of venture itself. So while they'll get, you talk about in the US, these crowdfunding and syndicates, even syndicates that are made up of accredited investors, right? There's about 7,000 people in the US making over the 200,000 to 300,000 a year. They're able to bring together billions, and that's increasing at double-digit rates every year. And because they're a little bit more flexible and on a deal-by-deal basis, the economics are actually better. They're able to move faster, and they're really using new tools and technology in order to increase the user experience for potential limited partners. So that's just a little taste of what the disruptive model of innovation. Which one will it be? Rolling funds, venture studios, syndicates, maybe even other areas such as digital assets. At this time, it's too early to tell. But thank you for listening. This is a little bit more from Rebel One. We also run an investor training program and have our own network. So again, please join us at it's rbl1.com/angels if you're interested in our program, rbl1.com/invest. And Tim, thanks for putting this together and having me today. Appreciate your time. So.
Thank you, Sergio. That was a great presentation. Honestly, absolutely loved it. And even I, person who considers himself professional in this field, had no idea that the carrot interest can be traced back to the whale hunting. So thank you a lot for that, and have a good day. And here we're moving on to the next speaker of ours, whose name is Matthew Nordgren. He's the founder and CEO of Arcadian Capital. And in this small part of his presentation, he's going to be talking about the field that I have no idea how it works as well, which is the investing in cannabis field. So Matthew, take it out from here. The floor is yours.
Hello, thank you. Okay. Hey, Sergio, that was a lot of fun to listen to, friend. I learned a few things myself there. And it was a nice pivot. It was a really great pivot because we run a fund called Arcadian in the cannabis and hemp space. And interestingly enough, we do believe this is a technology. It's an emerging industry for sure, an innovative industry, but it's a science-based technology. It's not necessarily computer-based, but it's homeostasis-based, it's internal, it's human-based. And I've spent 15, 20 years in finance in my career as well. And honestly, saw too many business plans that were about disrupting everything. And we saw the movement happening in the botanical wellness space. And we wanted to be a part of something that was reconnecting everything. I thought to myself, why does everything have to disrupt things? Why can't they just make them better? And that's what this industry is doing. This topic today is about what's going on in the cannabis space, the investing climate. And there's a lot to tell you, but let's unpack it a little bit. Let's go back and do this in 3 phases. Number 1, let's talk about before the pandemic. What was happening in our industry before the pandemic? Well, you're looking at a 35% compound annual growth number year over year going into the pandemic. Fortunately, in 2018, you reached a little bit of peak of the trade and basically had a situation where throughout 2019, these companies were working towards profitability, running lean companies, being properly valued, and a couple of other ups and downs. Heading into the pandemic, we had a great thing going in terms of what the industry's appetite was. Then the pandemic hits. What happens during phase 2 here in the last 3 phases we're going to go through? Phase 2 is, well, now you get to be tried and tested. You look at an industry and you say it's defensible, and then something happens, and then you get the chance to prove it, and all of a sudden we were deemed essential. And I'm so glad to be here with you, friends, because if that hadn't happened, we may be in a different place. But over the last 6 months, we proved to be resilient. We've been able to continue business as usual and increase profits in many, many, many cases, as you see in some of the public companies. So I think it's important to realize that before the pandemic hit, the industry was already working through some valuation and some profitability concerns that when the pandemic hit, you get to be an essential business. And then all of a sudden, you're able to show strength. Now, phase 3, what happens going forward? What does that mean for the industry after we get into the pandemic and we start to see exactly what the industry is doing in response to that and bringing people medicine? Well, the third phase is post-election. So we're going to talk a little bit about today where we are leading up to this election. Very difficult to call a whole bunch of specifics, but I don't think you have to, because no matter what happens, it's a good thing for us. A lot has just been tabled. A lot has just not been heard. The support is there, both in Congress and Senate, for certain aspects of cannabis and hemp legislature. And so I think you really have to pay attention to November. But no matter what happens, expect a flurry of activity leading into Q1, Q2 of next year. We talk about survive and then thrive. That's what's going on in the cannabis space right now. So I wanted to start off at least with framing where things are and how we got here in our space. But to go back to some of Sergio's points, it's like a technology. What's happening here is remarkable. It's absolutely remarkable. It's almost like you're watching this human-based transfer of information happening that happens inside of a computer. And it's because it's solving human beings' problems. The science behind this is why the whole thing matters. What is the state of the industry today? One person makes the next person's life a little bit better in some way, and we create a product for them and an industry to support that. This is not replacing a brand on a shelf. This is creating entirely new categories. It's almost like if you went back to the early days of venture and technology, if you went back to maybe the first days of Apple, if you went to Steve Jobs' garage and with Wozniak and they're in there working on things, they're trying to take technology, put it into a consumer product and deliver it to the consumer to create a new experience. And that's what branding is. And that's what's happening in the cannabis and hemp space right now. These two plants are absolutely phenomenal. They're natural and they're good for you. And now we're figuring out what products we can put them in. And then how do you brand that experience? And it's an entirely new brand. The consumer public has no idea most of these brands are even coming right now. And that's what's amazing. We get to define a category, in many ways define a generation. It seems similar to me if you go back to 1918, 1930s, alcohol prohibition. You have a pandemic then as well, a war, depression, a lot of need, and then a lot of public support, and something happens. I think you're going to see that here. I really do. Just don't know what direction. We're going to have to wait till November. Pay attention to the cannabis space, because I think as a category, we're a little bit different. I think we fit with this new sort of movement, you know, the health and wellness, the being present and mindful approach that the society, frankly, is dying for. And the plant botanical wellness in general as a category is something that can not only generate extremely outsized returns, not have to disrupt the world, we can put it back together, focus on internal science and technology, internal homeostasis. That's all our bodies are trying to do anyways. Let's help ourselves first. If we want to be impactful, this is that opportunity. Having been in finance for a very long time and as the founder and major partner of Arcadian, our goal was not just to go make money, but we wanted to target an industry that had growth, that had outsized opportunity, and this one does. But what could we do for the world? Something else the panelists before me talked about, Sergio. What can we do good for the world? How do you measure that? Well, we can do that here. There, to me, is not another industry that's going to generate these types of returns that will do this much good for the world. Please reach out to us at arcadiancap.com. We'd love to connect with you. We believe in collaboration. Whether you're an entrepreneur or an investor, the best way to do this in this climate today is together. And if you collaborate and you work together and you have an industry growing this much, and by the way, it's not just eyeballs or value potential. We're talking about $16 billion in revenue last year. We're talking about 300-something thousand jobs. We're talking about billions and billions of dollars of tax revenue. And so this industry has real growth. I would argue probably the highest growth opportunity in the country, maybe in the world, when you look at real cash revenue, job creation, asset value creation, because there's hard assets here too. So when you look at a space like this, with all that opportunity, work together. Call Arcadian Cap, arcadiancap.com. We would love to work with you if you're an entrepreneur, talk about your business. We're a growth investor, but we're here to help in any way we can. If you're an investor, it's just emerging industry 101. If you think the thing's going to move forward, the best thing you can do is reach out to one of the great funds, which humbly I think we're one of, but there are other really great funds as well. And we work very close together, just like they did in the 90s through early 2000s. When an emerging industry is moving and you see it happen, you got to work together. So please reach out to us. I think you'll be happy if you put your time and effort into this space. Most importantly, God bless. Thank you.
Thank you, Matthew. That was a great presentation. And I totally agree with that statement, you know, survive and then thrive. I think that's like really how to put COVID in 2 words. Just great. But our next speaker that I'm personally really looking forward to is David Mandel. He's the super angel. So for those who don't know who super angels are, those are super actively investing investors. So David, just quick background on him. He built an insurance company to over $400 million in annual premiums and exited. And since then, he has invested in over 500 companies. Now he's the managing partner of Emergent Venture Capital. And in this episode, in this presentation, he will talk about opportunities with emergent venture funds. And by the way, I just wanted to say big thank you to GreenLife Capital. It's super hard to bring super angels on conferences. So great work, guys. And David, the floor is yours.
Okay. Hello, everyone. This is David Mandel. Thanks for the great intro. As he mentioned, my background, I've built and exited 4 companies over a 28-year period. And then with everything exciting going on in tech, decided to stay away from starting another business and just go full-time into investing in the next generation of startups. Spent a lot of time back and forth to Silicon Valley, the Bay Area, seeing where the tech hub was. And made a lot of investments, mostly through others that are syndicating deals up there and starting to get some deal access. Over time, started to realize that in my own backyard here in Southern California, there's amazing tech. There's amazing programs, as Sergio mentioned, the various venture studios, but particularly the universities have amazing accelerator and incubator programs to support their graduate students. In every field, the business departments have them, but the science departments of different types have amazing programs for postdocs to stay on and do research and develop. And yet, all the attention seems to stay on the Bay Area. And yes, it's exciting, it's sexy. There's a lot of cool stuff going up in Northern California. A lot of unicorns come out of there, but it's also overblown. There's so much money chasing deals that every founder from startups, the minute they have an exit, start another startup, but also start investing as angel investors, and eventually often like what I'm doing here, what's termed micro VCs. They make small funds and raise money from others to invest in all their friends up there that are running startups, and it just proliferates. There's a ton of money chasing early stage technology in Northern California. Being very active here in Southern California, spending the last 6 years or so attending hundreds of events, every pitch day from universities, being active member in Pasadena Angels, Tech Coast Angels, and other organizations here, seeing the local community, I realized that Southern California and other hubs like this, such as Boston and Austin, Texas, and even Toronto in Canada, have amazing research going on, amazing founders starting technology startups with the tech they develop in every field conceivable, just as good or better, and often more innovative because it's slightly different than what's going on in Silicon Valley. And there's less money chasing it, at least at the early stages. You know, Southern California has a lot of money down here, and there is some great venture capital firms down here. But what's sexy in Southern California is, you know, esports, direct-to-consumer brands like Dollar Shave Club and all those kind of things. Everything obviously to do with Hollywood and entertainment and so forth is huge down here. The deep tech and emerging technologies are getting a little less attention in Southern California. And that's where, you know, there's still hundreds of us showing up to every pitch day everywhere and going around the universities, but it's not the Silicon Valley money and the other big funds at the early stage. So I saw an opportunity there. I was doing that as an individual angel investor, as others have. There's hundreds of us in Southern California that are active angel investors supporting the community. Eventually, I've decided to formalize that into a fund, and I have this series of funds so that basically each fund invests in a year to year and a half worth of 20 to 25 deals, so you get a basket of deals. Because, you know, investing in early stage technology is risky. Each individual deal probably has a 50% chance of not becoming a great success and just having a, you know, either failing or having a mediocre exit. But together as a basket, they're a great asset class. If you have a basket of 20 to 25 deals, you have a good chance of getting a nice blended total return at the end of the day. So rather than referring people in to say, okay, come angel invest with me, come join these groups, come out of the pitch days. Most people don't want to do that work. Great if you do. You're welcome to talk to me about how to get more involved. I'm always bringing people in, but there's also passive ways to invest in these startups through funds like my own and others. In particular, here's an example of what emerging tech is. Well, what's emerging tech? Everyone's talking about emerging tech. Well, on one side, the fields, as you can see on the right here, it's everything from agriculture to literally space. It's literally rocket science and sometimes not. Robotics is a hot field, drones. In a sense, everything that's using AI and machine learning, because you can't do any of this without it. IoT, as was mentioned before, when you take sensors, IoT, 5G technology, and AI, you put those together, you can do amazing things. The convergence today of all these tech, the new emerging tech that are coming together, are creating opportunities to solve real world problems in almost every field imaginable. And it just takes a group of founders who understand how to use this cutting edge tech and put it together to solve a real world problem. And it's everything. I mean, in our portfolio already, we have everything from drones making deliveries to oil rigs in the ocean, to sensor devices that are helping pig farmers not have the mama pigs crush the baby pigs, which is apparently a big issue in farming. So there's everything out there, and usually very elegant, simple solutions that are combining emerging technologies to create the solutions in a way that you couldn't even do 2 or 3 years ago. And these ideas are coming, as I said, from all over, not necessarily Silicon Valley. They're coming from Austin and Boston and everywhere else in between. There's a lot of startup incubators and accelerator programs that take very early stage companies, or as Sergio talked about, they're sometimes called venture studios that almost like initiate companies. That's great. Personally, that's not my idea of venture capital. My favorite saying has always been, ideas are smart and all the founders are smart. Ideas are cheap, all the founders are smart. There's a million great ideas. Every time you hear of something new out there, you'll think, half of us will sit there and say, oh, I thought of that. Well, yeah, we all think of these things. They all seem like, yeah, I've had the idea. That's nothing special. It's the execution. Ideas are one thing, being smart's another thing, but actually executing, building a product, shipping it quickly and building it economically, getting out there and getting people to pay for it. That's what matters. So as an investor, what myself and most others are looking for is that sweet spot of having some early traction. Founders that have ideas, if you're out there and you're in university, you're doing some research, or you just some guy off the street who has a great idea, don't look for funding. Build it. Build an MVP, a minimum viable product. Build something. Get some people to test it and use it. Get you some feedback on a real product, not your friends and family saying, oh yeah, that's a great idea. If you build it, I would be a customer, because people don't want to hurt your feelings. They'll always say it's a great idea. You have to get out there and get strangers to actually pay you for it. When you can get early customers actually paying you, that's real traction. Build something simple and ship. You'll never know until you ship. And once you can prove you do that, then you're fundable. Then myself and everybody else will be chasing you to fund you when you go to pitch days. You go to a pitch day and say, oh, I have this idea and I want to raise money to build it. You won't raise any money. If you go out there and say, hey, in only 6 months, we put a team together, we built this, and we already have 50 customers paying us $100 a month each for this, and we're getting 10 more customers each month, then you got our attention. We're interested. We'll write you a check. That pretty much summarizes the process. You would think that, oh, well, I have a great idea. Why didn't I get funded? Well, I'm a very small venture capitalist in Southern California, and yet I get pitched about 500 pitches a month. Pitch days like today, pitch days from every university program, there's usually from 8 to as many as 30 pitches in one event. We can attend multiple events per day. On top of that, there's 20 to 30 deals a day inbound, whether it's LinkedIn messages, direct emails, website inquiries. We're bombarded. So we can filter through all that, but we're not going to talk to everybody. You know, from that, we talk to a few that we think might be on thesis for us, and others do the same. And then you try to look for the right stage. And the vast majority, as I emphasized before, the vast majority are just too early. They want to get funded for the idea, and you really have to bootstrap the idea. You have to go out there and, you know, I mean, if it's research, you have to go through university programs, get grants, do what you need to do to spend several years doing research. VCs are not going to fund your research. If it's an idea to build some software product, some app, some other system, build it. Just build it. Build the simplest version you can, get out there, get people to use it, then you can get funded. You know, we fund 1 to 2 deals on average per month, sometimes a little more, but usually it's averaging 2 a month, and it's out of 3 to 500. So that's really how steep of a funnel it is on this, and how much, you know, how many people want to raise money versus how many get funded. You know, some of what's out here, there's angel groups, Tech Coast Angels, Pasadena Angels, Los Angeles Venture Association. Nationally, there's the Angel Capital Association, which is an association of angel groups, all great groups to look up and look into if you have any interest in this space, or feel free to talk to me. I can help anyone get connected to anything. Part of the way I get all the deal flow, as many others do, is just by, listen, being a member of all these groups, being on everyone's list, so we get invited to all the, you know, to all the pitch events, and then also investing myself as a limited partner in other fund, in all the incubator funds and various programs out there, so that when they're graduating, we already got to know them. If we're investors in those funds, we get to meet the cohorts as they're going through it and get to have our pick before graduation to see who we may want to invest in from the next batch each time. There are lots of other programs. As far as our fund, I said, I think I lost my screen there, but as far as our fund, say we're, the particular fund we're in right now is about halfway deployed. We made 14 investments already this year in this fund. We still have room to take on some more investors into it to finish out everything, because we paused the fundraising when the pandemic hit, so we never did our second close, so that's still open, which it shouldn't have been. And we're reopening that. We actually reopened that in August, and now looking to fill that. As far as deal flow, startups are always welcome to apply. Anyone that wants to learn more about us in particular, or just about the industry in general, you can go to emerging.vc or reach out to me directly on dmandel@emerging.vc. Thank you.
Great presentation, David. Thank you so much for taking your time to participate on our conference today. And by the way, I completely agree with you. You know, before building something, try to sell it. We, our venture studio, are all for that as well. And you know, if you have revenue, investors will come to you themselves. So here we're actually going to talk. Next presenter is Krishnan Varier, who's going to talk about growth versus profitability. And he is the managing partner at Arcadian Capital, and he'll talk about, you know, this growth, scaling, and profitability. So if you want to understand how to get that revenue, how to present it to the investors later on, get ready to hear it. And by the way, for those who are listening to us, there is a Q&A section. So if you have some question to one of our speakers, just put it in the Q&A and we'll either circle back to it or respond to you personally in a text form. So Krishnan, take it off. The floor is yours.
Hey, thanks, Konstantin. Appreciate the intro. And my name is Krishnan Varier. I am a managing partner with Arcadian Capital Markets. You met my business partner, Matt Nordgren, earlier. He gave you a little bit of an intro on who we are. But you know, for those who missed it, Arcadian Capital is a venture capital investment firm that is focused on investing in companies in the hyper-growth cannabis industry. So, you know, I think that it's appropriate for us to have a discussion around growth, considering the nature of our industry. Specifically, what I'm talking about today is when's the right time to prioritize growth, and how is it different in uncertain times? So being that cannabis right now is probably the fastest growing industry in the country and the world, coming into this year, cannabis is first of all, coming into this year, prior to this year, has been completely uncertain for all the operators in this industry. There's been a number of issues. On top of that, it's still federally not legal in the United States. We hope to change that pretty soon. But when asked the question, it's a complicated question, but I think it's easy to respond with a simple answer that kind of goes something like, every company that's ever been started has always started with an idea about how to address a problem, problem that's perceived by somebody. And then that idea will then get fleshed out with more ideas about how to turn that solution into a business and a product to sell. At some point, you're going to be able to validate the market potential and establish who's going to buy it, and basically you've got product market fit. Some point along the line, like David, the prior speaker, mentioned, you're going to have an MVP, and if you're able to substantiate that and articulate it well, there's a good chance you're going to be in a position where you're going to have enough capital, whether it's through your own resources or through investors like us, to help you sell to a lot more people. You're ready to scale up. You're in growth phase. This is obviously the right time to prioritize and focus on growth, right? I would assume. But according to Edward Hess, I was doing a little bit of reading prior to, as I was preparing for this talk. Edward Hess is a professor of he's a professor at the University of Virginia, Darden Graduate School of Business, and an author of a number of books and articles and studies, all dealing with growth and innovation and learning. And what he says is, to grow or die, which is something that a lot of people, in venture and in the startup world, always say. To grow or die is he says it's a belief that has no basis in scientific research or business reality. It's a perception. And, when not approached carefully, growth can destroy value because it can outstrip, managerial capacity, processes, and a number of other things. It's a resource draining, essentially. It's process intensive, and it does create business risks. So this environment is it is particularly interesting for companies that are in the startup mode, as they're trying to differentiate between, should you be focusing on growth? If not during this time, what are you focusing on? I guess, so then the question is, how is growth different in uncertain times? And I guess planning for growth is one of the hardest jobs as a leader, as an entrepreneur, in planning for the future. Quoting Ray Dalio here, who says that if you plan for the worst case scenario to make it as good as possible. And then during times of uncertainty, planning for the future is even more challenging. So everyone knows who Jeff Bezos is. If you don't, he's the CEO of Amazon. And at Amazon's recent annual shareholder meeting back in May, Jeff Bezos, he was asked this question of, how to make long-term plans, particularly in an environment like this. And his answer included a question that he says guides the company's long-term planning even in uncertain times. And this is something that I've heard him say over and over again. and it definitely has not changed. But what he said was one is certainty, or certainly things are going to change over time. But the question to ask as a leader, as an entrepreneur, is what's not going to change. At Amazon, what he says is they're going to always be customer obsessed and not competitor obsessed. So, we urge our companies to think about what will never change about their business, and to focus on and to build on that. Then establish a baseline of what won't change to create plans to move forward. Just because times are rough right now, it doesn't change the reason why you started your business. It doesn't change the purpose of why you started your business and your values. So, I think that it's important during uncertain times to stay focused on your original purpose. So that's the same with priorities. I think it's important to figure out which of your priorities should remain, regardless of any changing circumstances. What you value and prioritize for your business today shouldn't change with the circumstances, whether it's an election period, or whether it's coronavirus, or whether whether it's the largest bull run that we've experienced in our lifetimes. If they do, then it's probably not what's important. If those priorities are, if you ask yourself this question and the priorities do change, it's probably not important to your business. So in conclusion there, if your business is in a growth mode and things around you change, stick to that. If it's profits, if it's profitability, then stick to that. And you just have to figure out tactically, how do you get there, and that's going to change. So you also don't want to forget about the people and the decisions that you make about how you value people. That's what forms the culture of your company. So allow the choices around your resourcing to empower your team and your values. It's not about execution. Lastly, be intentional about how you want people to interact and build trust, and don't allow the world around you to let that change. So unless you really want to welcome the chaos that we're experiencing right now all around us to enter into your business. I think there's a way to separate that and continue to focus on growth and driving profitability, depending on what your priorities are at that time. Thanks for listening.
Great presentation, and I love the last part, welcome the chaos. I love it personally. And you've mentioned a lot of great points. I mean, one thing that struck a chord with me personally is, that hyper growth can actually be destructive in terms of managerial. Some founders just do not expect to get as many users, and pretty much everything falls apart. I've seen a company that gained, I think, like over 100,000 users per month in the US, while they were an Asian-based company. And I think their US operations just died off. So, growth is great, but be careful with it. And thanks a lot, Krishnan, for joining us today. And thanks to Arcadian Capital for giving us two of their managing partners.
Appreciate the opportunity
today. Have a good day. And our next speaker is Magdaline Small. Magdaline Small is the head of partnership for HubSpot for the startup in Southern California and Arizona. She has been with HubSpot for over 5 years and has spent the majority of her time working directly with small to medium-sized businesses as they leverage the HubSpot growth platform to change the way they sell, market to, and retain customers. And in her presentation, she's going to talk about scaling and using data analytics. So, if you have growth, you need to analyze it to show it to investors, to get more money, to grow more. So Magdaline is going to tell you how to do this stuff. Magdaline, take it off. The floor is yours.
All right, let me make sure. Okay, can everyone hear me? All right. So hi, everyone. We're going to be talking about scaling your business and leveraging analytics, machine learning, and data science in order to scale. So as we start to think about the importance of analytics, machine learning, and data science for your business, some things that it can do, having proper analytics in place and leveraging automation and AI, some benefits that it can help your business with are business-wide transparency and visibility. As a founder, as a startup, I think we all are looking for full visibility into what's happening from a business perspective. If you have a quality platform and a quality software system and way to track your analytics and your metrics, you'll be able to have full transparency as to what's happening across all channels and all departments of your business. This will also help as you start to scale to help make sure that you've got alignment between departments. I think the last thing that anyone wants is to start to scale their business, maybe hire some sales hires, maybe start to hire someone in marketing and have those people really misaligned or really living in silos. When you're able to have analytics, it helps everyone to align, and it also helps to make sure that as you are building these departments out, that these departments can be aligned on mutually agreed upon goals. So for example, making sure that your sales team is able to see how marketing is performing. So marketing is able to see how sales is actually working and closing their leads. All of this will make sure that your entire org is really mutually aligned on mutually agreed upon goals. And ultimately, those goals are typically generating revenue for the business and retaining customers. This will also help you to make real-time data-driven decisions. I think the last thing anyone wants is to have something happen in your business, notice it, but have to be reactive versus being proactive. So when you actually have quality analytics and quality reporting in place, you'll be able to assess this on a real-time basis and get ahead of potential problems, potential road blockages, potential gaps in your process versus having to wait and operate from a more reactive perspective. The other thing that this all can really help with is overall cost reduction. I think we've all seen that manual tasks like manual CRM, logging, things like that can really take time away from your day. No matter what function you are in or what function your team members are running, whether they are sales, marketing, customer service, you want to make sure that you and your team are able to spend your time where it matters the most. This means that if you've got salespeople, you want to have the data and the automation in place to make sure that they're spending their time on calls with prospects, with customers. Make sure that your marketers are creating really quality content and are leveraging things like machine learning, real-time analytics to be able to push that content to the right people so that they're not spending hours writing a blog post only for it to not get seen whatsoever. We want to make sure that our support personnel are really able to triage customer issues quickly and understand the full customer picture. So really making sure that, again, we're trimming up gaps in the business processes and allowing everyone to operate as efficiently and effectively as possible. This will also ultimately lead towards revenue generation. So again, thinking about ways that we can automate throughout the processes, make real-time data-driven decisions, and make sure that you're managing things like potential churn, make sure you're really able to assess what is the actual cost of your lead acquisition. What does that actual funnel look like? Are we getting enough leads in? How are they moving through your sales process? Where are leads coming from? Make real-time decisions in terms of how your ad spend is performing. All of that will be really helpful. So as we look to do that, I pulled just kind of a swath of reports that we offer inside of HubSpot, but these are some good things to think about when you're trying to build out your reporting and focus on what you actually need to build and have available from an analytics perspective. You can think about it in breaking out into kind of 3 categories. You do want to be reporting on your sales, your top of funnel, your lead generation, your demand generation. You want to understand how that's fully moving through the funnel. So whether it's a touchless purchase model or you've got sales reps actually managing a deal, you want to make sure that those leads are actually getting through the funnel and closing into deals. And then you also want to make sure that you're retaining customers. Within that, I think it's very important to have analytics and tracking around every piece of the puzzle. As I mentioned, if you're thinking about marketing, creating content, something like that, the last thing you want to do is put your time towards a campaign or an effort that won't net you the type of return you're looking for. So really make sure at every individual level that you have tracking enabled. What I mean by that, for example, is make sure that you're able to track leads to your website. Make sure if you're running ads that you're not only able to track how many leads that ad spend generates you, but that you're actually able to track it full funnel and see if those leads turn into qualified leads and ultimately deals and revenue for your company. Same with things like sales communication and sales templates. A lot of times I think we turn sales reps loose and just say, go do your prospecting. We look at the types of deals they're bringing in, but we don't necessarily help reps to say, are we spending our time where it matters from a communications perspective? So make sure you have ways to analyze the sales communication that's going out, the marketing communication that's going out, how your prospects and your customers are interacting with your website, with your social, all of that. This will all help you to report on what's working and not working. And it will also help you to craft a more full 360-degree view, buyer persona or contact profile, so that you can then use things like machine learning and AI to give a really targeted, really personalized experience to those customers. All right. And as we're thinking about leveraging things like machine learning and AI, some things you can keep in mind are the 5 Ps framework for artificial intelligence in marketing. So when you're planning how you can leverage AI and automation in your marketing, some things you can think about. The 5 Ps would be planning, production, personalization, promotion, and performance. So when you start to build your plan, it determines the goal of the campaign. Building buyer personas is really important at this step. This is going to inform any type of marketing and any type of way that you're using AI. Any type of way that you're using AI. Having buyer personas will guide everything from the process going forward. You want to analyze existing content that you have. Do you have content pieces that you're going to be leveraging as you're looking to automate and as you're looking to maybe provide recommended subscriptions of content to people? You want to look for maybe gaps and opportunities where you could create an ad to existing content. And then this piece is really mission critical. You want to segment your contact database so that you are able to actually do really targeted, individualized, and personalized marketing and sales communication, whether you're doing that from a one-on-one manual basis or especially when you're having some AI or machine learning tackle those personalized recommendations. For production, you want to create really intelligent quality copy. So that piece is easy. You want to develop curated copy. Personalization, we really want to start to think about targeted content. How can you personalize the experience that your prospects and your customers are having throughout any point in their buyer's journey, at any touch point that they would be interacting with your business? How can you personalize? You want to engage users through things like bots and chat. And you want to individualize and optimize your email send times. So make sure this piece, you really want to just make sure that you are communicating with your buyers in the way they want to be communicated with. For promotion, again, you want to be intelligent and smart about the way you're promoting, adjust your ad spend in real time, test things, A/B test things like headlines, landing pages, copy, templates, things like that. Schedule out your social posts and shares so you can get a feel for how often things are going out and automate that process. And make sure you're using a tool that helps you to have improved email deliverability. Lastly, you always want to be tracking performance. So making sure that you have reporting capabilities in place that help you with things like lead scoring, help you to do accurate forecasting, just simply having reports that will show you the analytics on every single piece of all of this, and making sure that you're sharing with your team, with your investors, with anyone that would be interested, performance reports so that you can show them in real time how the business is performing. So thank you all for having me. As Konstantin mentioned, I run partnerships for our HubSpot for Startups and Entrepreneur program here in Southern California and Arizona. If anyone is interested in learning more about our programs, we provide educational resources and software discounts to startups and entrepreneurs globally. Please come to hubspot.com/startups. Ask us any questions. We love talking strategy, whether it pertains to automation, AI, sales, marketing, customer service. We are always happy to answer any questions that we can from a strategic perspective.
Thank you, Magdalene, for this presentation. And by the way, I completely forgot to mention that we at our venture studio use HubSpot as well. And I personally love the email manager that you have. It's just super simple. I love the A/B testing. So great tool. And I highly, highly recommend everyone who thinks they need to do mass mailing or, A/B testing in the emails, definitely reach out to Magdalene because those discounts are super helpful. All right. So definitely do that. And if you forgot how to reach out to Magdalene, just leave a comment in the chat. We'll connect you later on. By the way, the poll just came up, so fill it out while I'm presenting the next coming speaker. By the way, Magdalene, thank you for coming up. Have a good day. So
thank you so much.
Now it's the time for us to start our pitch event. Now the founders of the companies will present their companies and we will vote. You exactly will vote for whoever Actually, that's the vote. My bad. Anyways, now is the first speaker. He is the CEO of TribeHerald. His name is Yitz Jordan. By the way, sorry if I pronounce your name right. I'm actually Russian, so I think I'm allowed to do that. So Yitz, please show up. It's your time to present TribeHerald. And by the way, keep in mind that the time is limited for the presentation, so you'll have only 6 minutes to do it. And 1 minute prior to the end of your presentation, I'll show you the phone saying that you're 1 minute away. All right, take it out.
Okay. So good morning, good afternoon, good evening, whatever time period you happen to be viewing me in. My name is Yitz Jordan, also known as Y Love. I'm the CEO of TribeHerald Media. I want you to imagine something. Imagine a color wheel with only 3 colors, or an ice cream store with only 4 flavors, or a pizza shop with only 2 toppings, or a sandwich shop with only 2 toppings. That's pretty much the way that mainstream media and traditional media is seeing the world today. And TribeHerald Media wants to disrupt that and upend the way that the media world looks at the world at large. Let me share my screen. Actually not. And now I'll share my screen. So enter TribeHerald. We are a multicultural digital media community built on diversity and inclusion from the ground up. We, for instance, look at this picture of 5 people. Traditional media will say that there's 5 people, maybe 5 young people, and maybe identify them by ethnic group. We see people who could be Muslim, they could be Jewish, they could be LGBT, they could be immigrants, they could be belonging to any number of communities that they're not necessarily going to be counted as part of. We're in the midst of a demographic shift in general. Minority communities are becoming more diverse. All of our communities are becoming more diverse. And it's to the point that 90 million Americans, that's 1 in 4 Americans, are going to be participating in a multicultural economy, whether it be through the media they consume or where they shop or where they conduct business. They're going to be part of a multicultural economy that we need to be prepared for. As it is, traditional media is old-fashioned. It ostracizes diverse communities. Many communities aren't even represented. We've heard stories about things like newsroom diversity, advertiser slip-ups, things like that. Media doesn't even appreciate multifaceted identities in general. A straight Black male will be put on TV show or in advertising as a representative for the Black community without taking into account Black women, LGBT people, and things like that. And this just comes back to the fact that individuals have unique needs and concerns that media fails to address, each person being their own unique Venn diagram of all the communities that come together, that they represent and that they come together to form them. And this is happening against the backdrop of a growth of internet publishing at 10% per year. And it's to the point that people are paying $10 per month per user, 65% of people in 2019, to not be represented accurately in media. It's to this, and all of this is happening in a media landscape that's being driven by millennials and Gen Z, digital first, entrepreneurial minded, wanting to create communities and wanting to share content with their networks. It's into this landscape that TribeHerald steps in. We want to be existing at the digital consolidation of multiculture, representing the nexuses of communities that are represented by our consumers, our clients, and our readers. We want to provide community building in a unique online and offline mix and provide culturally competent media solutions for not just our advertisers, but also for our readers and our consumers. I'm a rapper by trade for the past 20 years. My stage name is Y Love, and I was a pioneer in Jewish hip hop. We're starting off, therefore, in the Jewish community by targeting Jews of color who are an underserved population within the Jewish community in America and in Spanish-speaking countries. 700,000 of us live in New York. Hundreds of thousands live around the country. That puts us in competition with brands like Haaretz and Arut Sheva, which are Israeli brands, the Tablet, which was under fire for interviewing a white nationalist, and the Forward, which has been publishing for 100 years and still publishes in Yiddish and is not known for appreciating diversity. So what does this equal money-wise? We project $540,000 coming out of user subscriptions before 2022. That's 60,000 users at $9 per month. On top of this, we see ticket sales, webinar sales, things like that, sponsorship, content syndication, and many other avenues, adding up to $3.8 million in revenue by 2022 for a total number of $4.3 million in 2022. And this is only from our efforts within the Jewish community. TribeHerald was started by myself and our editor, Rabbi Shais Rishon, who's also known by his stage name, Manish Tanah. He's a 3-time published author, a former editor at Tablet Magazine, and an activist for the past 20 years. Our chief advisor is Jay Loft, the former publisher of Quartz, and our team is rounded out by our wonderful CFO and host today, our chief counsel, and Robin Washington, who was an activist and a prominent voice in the Black Jewish community for the past 20 years. So what have we done so far? January, we started the company. In March, we launched our Facebook page to a modest, in March, we launched our newsletter to a modest 300 subscribers. In April, we launched our Facebook page to a modest 500 followers. We would take that newsletter up to 1,000 subscribers when we launched our website, and we would launch to 4,000 users. Then we would launch our store in July. And after that, coming up to today, the newsletter is at 1,000 subscribers. The store has generated over $10,000 in revenue. We have 19,000 website users. Advertising contracts are in place, and 45 contributors contributing to TribeHerald.com from around the world. We're looking to scale that up to 100 contributors by the end of the year, raising that up to 100,000 website users. And of course, the opening up our QSR and community space, ideally in 2021, Corona willing, and including pop-up events and sponsored experiences. Right now, we're raising $1.1 million in a Reg D deal through a convertible note. The majority of this money is going to be going to staffing and content creators, as well as building out our community center and our location. In addition to a Reg CF crowdfunding deal, the majority of which is going to go to customer acquisition, as well as staffing and app development for the app that we hope to be launching within the next few months.
Yitz, your time is up.
Good thing. That's
perfect timing.
Ask me, feel free to ask in the Q&A.
Perfect. And by the way, now is the Q&A section. If you people, while the speaker is presenting, have some sort of questions for him or her, just put it in the comments or the Q&A section, and the presenters will decide which questions to answer. And since I don't see any Q&As here, no questions from you, I'm gonna use my power of being the ceremony master and ask my own question. So Yitz, I actually was wondering how exactly are you planning to scale further on? So are you planning just to apply your old strategies on a larger scale, or are you planning to do something new?
Well, when we say old strategies, that being creating a newsletter, creating social media presences, and creating web properties, and then creating community building exercises, that's going to happen throughout a variety of communities. Like I said, we're starting off with the Jewish community, and then we're going to progress to other underserved communities using a relatively similar model.
Got it. Perfect. And we have one question from Aaron Clayton. Yitz, are you an Israeli-based company or US-based? And second question is, who is your target audience from launch?
So initially at launch, we're launching to the Jewish community in the world, predominantly concentrating on Jews in the diaspora. We're based in New York, not based in Israel. We do have contributors who live in Israel, but we're based in New York. We're not an Israeli-based company.
Got it. That's a perfectly clear answer. I don't see any other questions, and I personally already asked the only one that I had. So thank you, Yitz, for your presentation. Thanks for being so clear, and have a good day. By the way, before we move on to the next presenter, I just wanted to mention that the polls are up. The people have spoken, and seems like David Mandel is the winner for today. He taught us the most. Next closest is Magdaline Small. So thank you all for participating and for sharing your knowledge. I believe that you all should be equal, to be honest, but it's not up to me to decide. I can't even vote. But let's move on to the next speaker. And the next speaker is Brian Rosenberg. By the way, sorry if I pronounce your last name wrong. So he is the Chief Executive Officer of Socrates, creator of the Socrates learning platform. Brian has 20 years of experience in designing, deploying, and optimizing software, and has experience leading and managing large teams and budgets of up to $100 million. So Brian, floor is yours. Take it off and present the Socrates learning platform.
Thank you. One moment, let me go ahead and share my screen.
While Brian is sharing, by the way, people, Q&A, don't forget to come up with good questions while Brian is speaking.
All right, great. Can you see my screen all right? Okay, I'll go ahead and get started. So, good morning. My name is Brian Rosenberg. I'm the Chief Executive Officer and co-founder of Socrates. Thank you for joining. I'm excited to tell you more about our company. Here's a quick overview of the status of our company, and I'll be sharing much of this information as we go through the presentation. You can see that we have a patented IP. We have a 6-member full-time, and we are based in Las Vegas, Nevada. I'll share a little bit more about the specifics of our raise in a moment. When you look at, the pandemic has created a crisis in education, and it's amplified many of the problems that already existed in the system. The majority of students are learning from home, but are they really learning? Zoom meetings and worksheets are not getting the job done, and existing technology solutions aren't holding the kids' interest. So Socrates is addressing many of these issues, and the question of how do we keep students engaged is important. How do we know the students who are in those Zoom classes aren't watching YouTube at the same time? And with less face-to-face time with the students, how do parents and educators meet the needs of those students, understanding that every student learns a little bit differently? So all of these problems existed prior to the pandemic due to overcrowded classrooms, the lack of good data and technology, but the pandemic has made all of these issues worse. This problem is not going to go away when COVID is gone, and education really has changed forever, not only in the United States, but around the world. And Socrates was designed to solve this problem by personalizing education, and we can do this on any topic, anywhere in real time. So we're adjusting to the needs of that individual student, providing transparency into their performance, and giving lots of data and information to the teachers. And we're motivating the students through gamification. And we have a lot of ways to keep the students engaged and excited about learning. And we also make sure that we're getting long-term mastery of the subject matter from the students. So we combine a variety of learning theories with artificial intelligence to personalize learning for the students across right now about 2,000 different topics of knowledge to meet their individual needs. And it works in that Socrates, we did a study with 3 schools here in Las Vegas when we first started. We were able to demonstrate an 18 to 34% increase in test scores over those in the same school who did not use Socrates. And the results were directly tied to the level of engagement that they had with the solution. So the more time they spent on Socrates, the better their results were on their tests. And when the pandemic started, we became really a crucial learning tools for the schools that we were in. And we discovered that the students learning at home would engage with Socrates more because they were excited to use Socrates. They enjoyed it. And the teachers found the information really helpful to allow them to be able to better manage the classroom. So we experienced not only growth in users, but a growth of engagement from our users as well. And all of our growth has been organic. We haven't really spent any significant money on marketing. So a little bit about our management team. I mentioned my prior experience includes 2 previous exits. My co-founder, Dr. Thomas, was a key member of a management team of a company that grew to $100 million valuation. Katie Decker, who is our Chief Content Officer, was a 30-year experienced teacher and principal, and she actually was recognized as National Principal of the Year by the Department of Education. And there's actually a day named after her here in Las Vegas, Katie Decker Day, due to a recognition for her ability to turn one-star schools into five-star schools throughout her career. And then John, our Chief Operating Officer, has extensive experience for bringing startup products to market, and really has been a critical addition to our team in the last few months. We started in 2018 after receiving a grant from the National Science Foundation. Our first school year was focused on proving out and refining our product, and really we started selling the product in mid-2019. You can see some of the traction so far, which includes about 50,000 users. We have grown customers both in schools and libraries. We're now available in about 200 different schools and libraries. In addition, we have platform customers where we're delivering content prepared by third parties. And recently, we just actually have a fourth deal with a major scouting organization that will shortly be officially announced. The EdTech market, I think we all know that that's a really big market. These numbers actually are from prior to COVID-19. So the CARES Act is putting a significant amount of money into education technology. So we do expect these numbers to grow dramatically in the next few years. And you can see our projections as well. And a little bit about the business model. Socrates really is available as a software as a service, where we are providing the content that we create first party to schools and to homes in a business to consumer model. They could be homeschoolers. In addition, we are available as a platform to deliver third-party content through our platform using artificial intelligence and gamification. And long-term, we have the ability to add significant amounts of additional content that will allow us to be able to grow and expand our revenue base with our existing customers. This is a quick look at our competitive landscape. There's really no dominant player in education technology. There's a lot of key differentiators that Socrates has over those companies that makes us more effective in both engaging the students and personalizing that learning experience. Shows our sales projections, and you can see we have pipeline already for these numbers. In addition, we're going to be putting significant marketing dollars into growing our business to consumer side. And last shows are the ask. Majority of the money we're going to be using is for marketing and building our content, so we have more products to be able to serve our customers and to be able to obtain more revenue from the existing customers as well as new customers. So with that, thank you for listening. I'm happy to answer any questions that you have and hope that you'll help us to improve the quality of education for our children.
Brian, thank you for being so much on time. I was getting ready to cut you off, but didn't have to. Perfect timing there, and thank you for that. So we have already two questions. I'll start with the first one from an anonymous attendee for some reason. But the question is, what do you attribute your success in Mexico to? And the second question from the same attendee is, can you dive into the gamification and how that works?
Sure. Okay. In regards to we actually have grown significantly in Latin America and Mexico specifically, and a lot of that has been because there's really not a lot of technology focused on that area. We've translated and made our entire platform available in Spanish, and we can add other languages in the future. And so it is easier to grow faster as we have contracts directly with state departments of education. While in the U.S. there's actually 14,000 school districts in the United States, so it's much more fragmented of a market. In relation to the gamification, we have about 18 elements of gamification in the software, things like leveling and card packs where they can collect different cards, a lot of different ways to engage the students, and overall works with a learning paywall where basically they have to learn to earn tickets and tokens that they can use to buy different gamification items within the software. So that model, sort of like a Dave & Buster's or a Chuck E. Cheese, it's really engaging for the kids and engaging for really anybody of any age to get lots of rewards and motivation to move forward, and it keeps them constantly playing and as a result learning more.
Perfect answer. And we have time for one more question, and that's the question I personally like, again from Aaron Clayton. Is there a plan in place for education to be created for those with learning difficulties?
It's a good question. Actually, because of the fact that we adjust and personalize to the needs of the student, we're really well suited for special education, and we've had success in that area. So we already do that with the content that we have, and we adjust across any of those topics simultaneously in real time. So we're really powerful for that purpose. We actually, one of those platform arrangements is around speech therapy. So we do intend to build additional content for additional special needs, and that's one example. But as we grow our content, we're really limited more by our ability to invest in creating that content and finding the right content partners to work with in each of those areas.
Great answer. And unfortunately, there are two more questions, but unfortunately, I cannot ask those because we're running out of time. And Brian, thank you a lot for taking your time to present and sharing your company with us. I think it's a great idea. And by the way, congrats on that great traction and best of luck to you. The next speaker that's coming up is the Chief Security Officer, Josh Alper. He's the Chief Security Officer at H360 Labs. So Josh, take it off. The floor is all yours.
Okay, there, you guys unmuted me. Now you've let me loose. Okay, thank you so much. Can you hear me okay?
It sounds great.
Okay, great. And so I'm going to share my screen. How's that? Can you see that?
Not at the moment.
Let's see. Let's try this again. Go back here. Share. Desktop. Okay.
Now I can see. Perfect. Your time has
Okay,
started.
did it. Well, now we got to go back to the beginning now. Okay, here we are. All right. Well, thank you so much, and thank you for attending. I was actually got so interested in the Socrates presentation, I forgot I was up next. Great presentation, Brian, by the way. So, you know, I'm from Blue Diamond Ventures, and one of our holdings is H360 Labs out of Puerto Rico. And so you'll notice it says Cannabis and Hemp Technology Solutions. And so the reason we talk about solutions is we don't own the lab. What we do is we sell packages of IP and know-how to lab operators. So in the parlance of the SBA and the IRS and federal government, we are not a cannabis company because we don't touch the plant. But I can tell you, we are very, very much a cannabis company, and many companies like ourselves are in the peripheral and ancillary businesses. So what is our solution, and what are we doing in the cannabis space? We're using the best-in-class components to deliver a solution that's customized for the regulations for hemp and cannabis testing in each state. As you probably know, each state in the United States has a completely different regulatory structure because of the lack of a federal program. And so what we've been able to do is to take a package, let's say sort of similar to a hospitality model, where you might have an owner operator of a hotel, and they may decide to go and buy into the Hilton brand, because Hilton would provide them the framework, all of the procedures, all of the design guidelines, help them acquire clients through the reservation system. So we do that. We acquire clients. Part of our business is to provide a package of IP and know-how, really including equipment, methods, standards, and everything to lab operators, so they can really focus on driving revenue, while we focus on continually providing the regular development of innovation, the improvements in the technology and the types of testing, and keep up with really the regulatory framework and what's happening across the whole country. So, you know, if we look at really what are our advantages, our knowledge of the cannabis science and global markets is really critical. We really know this industry. We know its history. We know the products. We know how the products are used. We know who the players are. For this particular project in Missouri, we spent 2 years embedding ourselves in the market to achieve this position by writing applications, providing consultants. Our CEO, Todd Scatini, is living in Kansas City for 3 years and is serving on many boards and groups within the industry. So we really know this industry, and it's amazing how many potential lab science groups there are. We think we have one of the best science groups in the state of Missouri. Our lab director and our chemists are the top in their class, but they don't know anything about cannabis. And so what we've been able to do, again, is put together that package of intellectual property and procedures for them to buy into. So to do this, we've gotten into certain strategic partnerships. One of the most important is the Waters Corporation, which is a manufacturer, a global 70-year-old manufacturer of the gold standard of testing equipment, and also Green Orchard Labs, which is the cannabis lab license owner in Missouri that has signed the royalty agreement with us to provide them with the complete package. Also, right over the border in Kansas, we've already started our research process with K-State, and hopefully Todd Scatini, our CEO, will get a chance to speak, and you can learn a little bit about our motivation behind this, which is really to drive research for veterans. So this is what we're providing in Missouri, is really an integrated solution, complete with informatics, totally interfaced to state compliance, all the client portals, all the metric systems. Again, we've taken the best in class and applied it in Missouri. So talk a little bit about the contracts that are in place. Missouri is launching right now with 86 processors, 60 cultivators, 192 dispensaries, all coming online in what we think may be one of the best medical programs in the whole country.
We have just 30 seconds left.
Oh, in the whole procedure? Oh, okay, sorry. So obviously team is important. We're looking for, we're selling promissory notes at $25,000 a piece, raising $2 million. We believe that the royalties are very secure, backup for the money that we're raising. Plus, there's tax incentives available through the fact that we're based out of Puerto Rico, which was designed to meet the requirements of the DHSS. So, thank you for listening.
I think I'll make like a small exception here, and actually, never mind. I will not make an exception. But Todd, I think what we can do here is that you can answer the questions that we got from the audience. So, first question is, do you have any current and notable deal flow? Mo? I'm not quite sure what Mo stands for, but do you have any current and notable deal flow? And the second question from the same attendee is, what tax benefits do you get from being headquartered in PR? I'm assuming that's the state of the name of the state.
Puerto Rico. Yeah. So I'd like to have Josh respond on the tax side, what the multiple incentives are that are available in Puerto Rico. But essentially they've made it attractive for companies to come there because they need investment. They need business. When tax incentives no longer benefited pharmaceutical industries, they kind of left Puerto Rico. What it left was this huge vacuum there. So they're trying to bring people back. And, we've been in formal conversations with the Puerto Rican Department of Agriculture that invited us to headquarter there and to submit an R&D license there so that we could help facilitate their hemp industries. And I think the previous one, and I hope that answers the question, we can certainly go into it. And I think there's some mingle time at some point during the day. I'm hoping. And I think the second question was pointing to what is the deal flow currently in Missouri and why Missouri, right? It seems like a crazy place for cannabis and or hemp, endeavor to be taking place, when in fact, it's the ideal place. I've been here for 4 years, as Josh said. I've been kind of setting the conditions, helping pass the medical marijuana program here in Missouri, and also being very heavily involved in the hemp industry in Missouri. And here we have so many processors, so many cultivators. It will be the best medical marijuana program in the United States. We have a contract signed with an organization called Green Orchard Labs, which is a licensed Missouri medical marijuana company, and for testing. And we have signed with them this contract for our know-how, IP, and technology to provide them the entire package to establish and run that laboratory. That equals to, and I don't know, Josh, if you can share your screen again or not, but.
Well, you know, the only thing I would, if you can hear me, the only thing I would add to that, Todd, is that, you know, the contract with Green Orchard is one side of it. We've actually gone out into the marketplace and we've signed LOIs with the 5 largest cultivators and processors in the state. So not only have we enabled Green Orchard to accept tests from the marketplace, we've loaded them up with more testing already contracted than we are showing as a requirement in our business plan. So we've been able to secure both sides of this, and the lab is under construction right now with an expected opening date of middle of December to coincide with the opening of all of the licenses in Missouri.
Perfect. Congratulations on your progress. And here we'll have to wrap up the Q&A section because we're out of time again. But for those who didn't get a chance to ask their question or who did not hear the answer for their question, unfortunately, we're limited on time. So you can ask the same question in the later on networking session. So please just keep them in mind, just write them down somewhere and be ready to ask them later on. And now we're moving on to the next speaker, who is the CEO of eBumps, Jonah Tuckman. And sorry again if I pronounced your name wrong. Take it off. By the way, super excited to hear what it is because eBumps sounds very intriguing.
Yeah, thank you very much. Let me just share this quickly. Okay, my name is Jonah Tuckman. I am the founder and CEO of eBumps Inc. eBumps serves an $8 billion market where there are currently 227 million licensed drivers in the US who are currently not monetizing their personal space. When founding this company, we were identified with a problem both in the outdoor advertising space and the personal monetization space. With outdoor advertisers, we found that in the out-of-home advertising space, there's a difficulty to track an ROI. And similarly, there's a difficulty in having a liquid campaign as you try and run these systems. And in the personal monetization space, we found it quite difficult to monetize your space as an individual without a large platform of followers. And so we built a solution being eBumps, which are 21.5-inch LCD screens that are mounted to the passenger side door of cars facing the sidewalk. We found that through data collected from competitor companies, these will average roughly 50,000 impressions a day. And through that, we created a proprietary software and advertising platform, which will allow us to connect advertisers looking to buy CPMs on these screens with these drivers and allow the driver to be compensated for the driving that they already do. We are also giving the advertisers targeted ads and data collections for the out-of-home campaigns that they would be running. Because it's such a new idea, we have a short video that we'd like to show to explain the idea more fluidly.
eBumps is creating a completely new ad space, allowing drivers to be paid for work that they're already doing. We give advertisers the insight associated with digital advertisements and the attention-grabbing flair of outdoor ones by allowing them to advertise on the fleet of cars already filling the streets. Users can evaluate their ad campaigns in real time and see when and where people are interacting with them. This gives everyday drivers an additional source of passive income. By displaying our ads on your car, you get paid for the driving you already do. In an ever uncertain world, eBumps provides exciting new opportunities for everyone.
We've identified this market size to be $263 billion annually in the US advertising budget and $8.6 billion in terms of US billboard and outdoor advertising alone. In terms of our market size, with generally rather conservative projections in terms of driver retention and CPM sales. We see in 2024 a revenue stream of $305 million annually, which is less than 5% of this total market. Our business model is based on vCPMs, also known as a viewable CPM. And essentially our software allows us to get an accurate count of all of the impressions that go by our screens. And so they allow for advertisers to buy CPMs off of us and have an accurate count of those that they pass by with digital analytics based on their advertising campaigns, and then a slight portion of that being sold to the drivers to compensate them for their driving. As of now, we have a provisional patent filed, and we have made strategic manufacturing partnerships such as AUO, who's a Taiwanese LCD manufacturing firm with partnerships such as Samsung, and Tech Global, who is a Chicago-based system integration firm with partnerships such as Motorola, 3M, Delta, and many more. The competitors in the field right now are companies such as Grabit, Firefly, and Halo, all of which being large and bulky permanent fixtures which require professional installation. And our system being different because it is a low-cost LCD screen that can be easily installed without a professional installation team, and is not a permanent fixture for the driver, allowing the ease of use of the driving campaign. And for the advertiser, we offer data collection and location targeting, which is pretty unseen in the outdoor advertising space, to allow them to have the highest analytics from their outdoor campaign. Our go-to-market plan is twofold. For the drivers, we are originally targeting the New York taxi industry based on the high foot traffic of the city. And we're using guerrilla marketing tactics as well as search engine optimization. And we're beginning in New York, but after that point, we are expanding to cities like Seattle, Vegas, Austin, Chicago, and Boston. And from there, further nationally and then globally. We're doing this alongside our marketing firm, Marketing 360, who we have partnered with, who is a Denver-based firm who is incredibly reputable and reps different companies such as the Denver Broncos. For the agencies themselves, we are targeting advertising agencies, individual companies, and we are doing this through in-house and out-of-house sales. And we're also allowing Marketing 360 to aid us in this approach using search engine optimization as well. Our founding team is myself, the CEO, our co-founder Cole Johnson, who is Director of Business Development, and Corin Rose, who is the Chief Technology Officer. And we're looking to raise $2 million, which we will then use to take our 25 screens that are going to market December 1st and to deploy 1,600 additional in the year 2021. And we will originally be going after New York City taxis, and as I said, expanding to further cities, and doing this by expanding our sales and marketing team, as well as bringing on further engineers to continue to update the system as it gets more complex and features are added. So thank you very much, everyone, and I do hope that you will be a part of the future of advertising alongside us.
That's a great presentation. And by the way, I have recently interviewed the founder of Halo on Fundraising Radio. So super epic and small world. But we have 3 questions here. I'll start with the one that I like the most. I'll take my power to choose my own question. So one question from an anonymous attendee is, can rideshare drivers get in on this? Any restriction from Uber or Lyft?
Yeah, so absolutely. The only restrictions that are currently present are in New York City, where there are regulations based on protecting the yellow cab industry. And so that's why we are originally targeting the yellow cabs in New York, but elsewhere, all of the different ride shares are absolutely available to use them. We understand that this is a market they're interested in, as Halo or Lyft acquired Halo in the beginning of this year. So we understand that it's certainly a industry that's attractive to rideshare.
Perfect, great answer. And quick question from William. How much equity does an investor get for an investment of $2 million?
Yeah, so we are currently being evaluated by a firm that we bought in to do this. So we'll have the terms solidified sometime next week, probably Wednesday or Thursday. So if you'd like to contact me, I'd be happy to send that over once we have it. And it will be an investor-ready document spelling out, the details of the valuation.
Perfect, perfect. And by the way, all those questions can be answered again. I mean, can be discussed after the major part of our today's conference on the networking event. So last question that I'm going to ask you is from Arif Damji. Sorry if I pronounced your name wrong. But the question is about the barrier to entry in this space. So if you get some initial traction, what is to stop a Firefly adding this as an ad offering to their drivers?
Yeah, absolutely. One of the things behind that is quality. We partnered with AUO, as I had mentioned, who is often said to be the best LCD manufacturer in the world. They've won over 55 awards in the LCD space since 2014, and they have a providership agreement with us, meaning that if another screen were to be put to the market, it would be of a lower quality than ours and would be within a system that isn't open to the public, meaning that our ad store is open for everyone to run. And Firefly, for example, has bought an out-of-home agency to run their ads on. So ours is more public-based, and although our patent is broad, it's incredibly hard to patent things in tech, as is well known by everyone here. So we are protected in that sense, but of course, there will always be competitors. We just think that we've solidified the quality there.
Perfect answer. Perfect answer. There's always going to be a competitor, and I think that should be like a big of a concern. So we're moving on to the next speaker. Thank you, Jonah, for coming up and for sharing your info. By the way, in the networking event, I'll definitely talk a little bit more about the founder of Hallow and to see if I can connect you to him. But now we're moving on to the next speaker. His name is Scott Wingo. He's the CEO of Get Spiffy, and that's again another creative name, which I'm really excited to hear about. So Scott, take it off from here and tell us about what Get Spiffy is about.
Hey, how's everybody doing? I am Scott Wingo, CEO of Spiffy. Thanks to Tim and company for having me today, and I'm glad I have a relatively easy to pronounce name, so it's one of my strong suits, if you will. So at Spiffy, we are disrupting the car care experience. Even pre-COVID, you didn't wake up and say, wow, I'm really looking forward to getting my oil changed today, dealing with a tire, or going to the dealer or wherever it is you go to take care of your car. A little bit about me. I am the CEO and co-founder. I'm a serial entrepreneur here in Research Triangle Park, North Carolina. This is my fourth startup. So the most interesting one that kind of led to Spiffy is called ChannelAdvisor. I started ChannelAdvisor 2001, went public in 2013. ChannelAdvisor allows retailers and brands to sell across marketplaces and in the e-commerce sphere. So what we're doing is we're bringing those e-commerce DNA, if you will, to the car care industry. I'm really excited about that because we've seen consumer goods go digital, if you will, and we are going to see services go digital. So I had previously bought a car wash as just a side investment while building ChannelAdvisor, and had my first Uber experience in 2011. And that was the light bulb moment where I said, if services go digital, that space is twice the size of consumer goods, and it's going to go faster than e-commerce because e-commerce has already laid all the framework needed to have digital services. We have smartphones, digital payments, etc. The other big trend that we ride here at Spiffy is the convenience-oriented consumer. That was the thing pre-COVID. COVID's accelerated this. In the world of e-commerce, we've had 3 years of adoption in 3 months. In digital services, I think we've gotten kind of 5 years. And then the other trend is auto services. An example of this, for example, is Carvana. They've seen a similar acceleration to their business. The other thing we talk about a lot at Spiffy that I won't have time to talk about, but we can talk about in Q&A or the networking session, is the car is set to change more in the next 10 years than it has in the last 120 years. I'm a big Tesla enthusiast. They just had a battery day. We have a lot going on in the world of cars that benefits Spiffy. So here at Spiffy, we have three growth levers that I'll just hit on very quickly. We have geographic expansion. We started in Raleigh-Durham, and now we've expanded into 24 markets. Our goal is to get into 50 markets. We use that number because that's where Amazon can get to 80% of their Prime customers with a service called Prime Now. We're expanding services. We started with car washing and detail. We've added oil change, and now we're piloting tires. And we think there's 6 or 7 other services we can provide in any metro area to really provide that take care of my car for me, I don't want to deal with it experience that consumers are craving. And then the one I do want to spend a little time on is how the company has been built over time. We just launched an app and to experiment, and what we discovered is when you give consumers an app, they love having their car washed at work. So 80% of what we do at Spiffy is fleet or B2B, 20% is consumer. Pre-COVID, the bulk of that is office parks. So we go to office parks and service consumers. COVID has obviously kind of put that on pause for, I think, next year or so. I do think people will come back to offices. So we're using more residential services for consumer. It's a pretty small part of what we do. Then we introduced oil change in 2017, and that really lit up the fleet business for us. Part of our DNA, I should mention, is that we're as eco-friendly as possible. So when we wash a vehicle, be it a consumer vehicle at home, an office, or we do a fleet vehicle, we recycle 100% of the water using a system that we've developed. The other thing that's really core to Spiffy is we are not a 1099 marketplaces. We decided early on that Amazon has this right. If you really want to own the customer experience, you have to kind of start at the customer and work backwards. The customer doesn't want a random 1099 person that is ununiformed and untrained showing up and messing around with their car. They want a complete, insured, trained, uniformed W-2 experience. So that's what we deliver. I like to call it a full stack experience. We've totally vertically integrated the consumer experience. But 80% of our business is fleets, and a large chunk of that is rental car companies. We work with the likes of Carvana. U-Haul is a big customer of ours. So it's a lot like an enterprise software experience where we have an entry point, and that's usually wash or oil change, and then we add other services as illustrated here. Here's the cities that we're in. Our plan is to get into 50 cities. Now, one of the things the pandemic did for us is give us time to work on franchising. So we've just announced franchising. And the way it's going to work is if there's a pyramid of cities, we're going to do owned and operated in the top 50 cities. And then the next 200 cities will be where we have franchising available. Here's some examples of our fleet customers. I'm getting the hook, so I will wrap up quickly. We put all this together because we made that decision early on to have employees and leased vans. We need to keep those as busy as possible. So by having these 3 lines of business, it allows us to optimize the business. And just to give you an idea of results, last year we did $8 million in top line revenue. This year we'll do 14. Next year, we are working on a Series B. We'll do 20 to 30 million. And then in 2022, this business can grow very quickly. We've got the bulk of the investment behind us. So it's largely geographic and service expansion, which we're really dialed in on. We'll get to a $60 million outcome, but we'll exit 2022 at about a $100 million run rate. And we think that's a huge valuation creation event. With that, I will turn it over to any questions.
Perfect timing. I was about to cut you off, but great timing here. So yeah, first question from Aaron Clayton. Do you deal with parts, and who manufactures these parts, if so?
Yeah, we do. So when we do car washing, there's a bunch of chemicals. Our core chemical provider there is called Simonize. Fun story, they actually have a huge line of disinfectants because they also do janitorial supplies for hospitals. That was one of the things that really saved our bacon during COVID, is taking those hospital grade disinfectants and applying them to our fleet and consumer services. For oil changes, one of our investors is called Mon Hummel, and they're the world's largest producer of filters. So that's where we get our oil filters. We also have Shell Oil as an investor, and that's where we get our oil. For other auto parts, we do work with some of the stores. AutoZone, we do their fleet, so we have an affinity for them, and we do try to source most of the parts from AutoZone.
Perfect, quick answer time. And here's another question from David Burton. Was the raise and at what valuation? I think that was the previous slide, but I forgot. That would be nice.
Yeah, so the post money on our previous round was just north of 35 million.
Got it. Perfect. Then I think we don't have any more questions from the audience. And I think you've done a great job presenting the Spiffy. So I don't have any more questions either. Thank you, Scott, and have a good day. So here we're moving on to the next speaker, Karen Ordonis, founder and CEO at Tutor. So Karen, the floor is yours, but I did not see you as a panelist. Give me just a second. She's right there. All right. The floor is yours. Let me unmute you real quick. And you should see the button like unmute.
Hello?
There you go. Perfect.
Can you hear me and
yes.
see my screen? Yeah. Okay, so hello everyone. My name is Karen Ordonis. I would like to introduce you to Tutor.id. We are a platform that connects tutors and students with a proprietary CRM for tutors. This is our secret sauce. I'm here asking for $1 million at the 6 million pre-money evaluation. So the top EdTech unicorns in the world, the top 3 are in tutoring companies, and we hope to be part of this list in the near future. The story why Tutor.id exists is based on my own needs as a tutor. I grew my business from 0 to 100 students within 3 months, and teaching was very exciting for me, but management was a hassle. I had to do so many things at the same time, and I really wanted to focus on tutoring. So Tutor.id was born as a management tool to help me manage my own business, and I realized that was helping my peers as well. Currently, the tutoring market is a 200 billion market size, and our competitors haven't addressed that tutors don't have a one-stop shop where they can fully manage their business and acquire new students. Currently, they can only find new students, but what happens next, it's up to them. And not every tutor knows how to manage their business very well. Marketplaces have a low lifetime value of students. Exactly because of that, they don't stay in the platform to manage their students, so they steal the student from the platform and they manage themselves elsewhere. The average is 4 lessons per student. There are a lack of tools to track the learning progress, meaning that students, if they don't feel that they are learning, even though they are learning, they will probably drop that tutor. And tutoring marketplaces, they have no teaching standards. Online tutors' credibility is quite low. It's a gap in the market and it's a real problem. Our solution is our marketplace with a proprietary CRM that helps tutors to establish, grow, and manage their brand and business and manage their students much better. Because of that, tutors are very loyal to our platform. They have stayed with us for 2 years and counting, and they even bring their own students. This is something very, very special about Tutor.id. Instead of like people like taking the students outside the platform, they actually bring them to manage all of their students in one place. The average is 30 students per tutor if they are very successful. We have advanced progress tracking tools that also increases student retention. They get excited, they're learning, they keep booking more lessons. So our average is 36 hours versus 4. So this is very good. And we also vet tutors and we interview them before they're visible on our marketplace. So if there is a subject that we don't have an expert, we will find an expert to actually interview this tutor. So we have 2 products inside of one. We have the marketplace and we have the SaaS for tutors. And this is how the product looks inside. And our success case is tutorpreneur Leandro. He managed a 6-figure business since 2018 with us. The impact as well, tutors, they save time and they feel empowered. They have a sense of belonging. This is an example why we are not afraid to have them advertising on social media, because we know they will come back. So every tutor has a profile, and once they put it on Facebook, it looks like a very beautiful business card that also helps with our branding and their branding. Students, well, they keep longer in the platform, as I explained before, so both of them are impacted very positively. Currently, we have 250 vetted active tutors from the total of 6,000 signups. So again, like, we could have 6,000 tutors, but not all of them are high quality. So we chose to be really, really picky regarding the tutors that joins us. we've had 24,000 hours of lessons, and we have 50 subjects. The most popular ones are English as a second language, mathematics, and coding. This is how our competitors look in comparison to us. We have a lot of management tools, and these are the tools that they have been asking. We know for a fact that they have been asking our competitors to build, but it's a bit of a risk for their business because they are already marketplaces and they're already generating profit, and they have to suddenly change their whole business model. So it takes like 2 or 3 years for them to replicate what we have if they want to. We have really big social proof. We only have 5-star reviews on Trustpilot. Our tutors really love this platform, our platform, and the services that we are providing them. We're really helping them to have organized businesses. EdTech, due to COVID-19, it is going to grow from $200 billion markets to $400 billion market. And the biggest of them being Japan, the UK, Hong Kong, and well, where I'm from Brazil. So Latin America is the 4th largest tutoring market globally. So because I'm Brazilian, we have tested Tutor.id in Brazil. So we have organic growth there. We are always on Facebook communicating with tutors, and tutors talk to tutors. So we are growing a big community online. They are a great source of also student acquisition. Currently, we are pairing like American and British tutors with Brazilian students. And should we have the right partner, we would love to be in Japan as well. They generate $11 billion a year in tutoring. So we would really like to be in Japan. So the possibility also to expand globally with joint ventures is something that we are exploring. So we have ongoing conversations with a big group in India, educational group in India and the Philippines. Our business model, well, we have our business model, one model fuels the other. So the marketplace, we take a 15% revenue share per lesson or package of lessons. And we have the subscription for tutors. So when they import their business to Tutor.id, they pay according to their needs, either $9.99 or $35.90. The more students we bring to the marketplace, the more tutors will feel the need to manage their students with us. So that's why we believe like the more students we bring, the more subscriptions we'll have.
Unfortunately, I have to cut you off here and rush you to the ending because you run out of time.
Yes. So I'm going to the exciting part. Should we raise 1 million? We're going to be profitable by 2023. And 2023, we will have 2 million in profit and 80 million in 2024. Hopefully by then we're going to be raising Series A. Thank you very much. These are my contacts and I'm ready for your questions.
So there are no questions from our listeners so far, but I'll ask my own. So based on the last slide that you showed, you mentioned that you're going to be profitable in 2023. Is that, yes. Does that mean that you're going to break even in 2023? So you'll actually...
Yes.
Mm-hmm. And why is the projection so far away? So why can't you be profitable in 2021?
Well, we need to, well, that depends on the money that we are raising, our marketing campaigns, the effectiveness of the marketing campaign, and the lowering the cost of per customer acquisition. That takes some time. We have 2 years in order to work with all the influencer plans that we have to have the marketing campaigns. That takes some time. We need to build trust as well, especially as an education company.
Got it. Okay, got it. Speaking of trust, by the way, you mentioned that you help tutors to establish their branding. How does that work? Do you have like some sort of ranking systems there that you help students vote for best tutors, and then those tutors are able to share it on social media, or is it some other system?
Well, after every session, students, they give a rating to the tutor, and of course the tutors that have the most, like we have like a heart system, the tutors that receive the most hearts, then they are on the top of our search. And also recommendations, they also help tutors to be on the top of the search. I don't know if I answered your question.
That did answer my question. Love the heart system. Reminds me of the early school. But here I'm running out of time, so no more questions. And if any of you listeners had any questions to Karen, but didn't get a chance to type it down, remember that there's going to be a networking event pretty soon, so you'll be able to ask those questions in person. But here we're gonna say goodbye. Karen, thank you for coming up and sharing your Tutor.id. Love the logo, by the way, on the wall. It's perfect.
Thank you.
And we're moving on to the next speaker, Chad Johnson, who is the founder and CEO at Heighten. So Chad, coming up and take the floor away from Karen.
Hello. Could you?
You've just muted yourself. Okay, now I can hear you again.
Awesome. Could you add Shahar to the screen as well, please?
Oh yeah, Karen is still, okay, cool. Now it should be working.
Thank you, Konstantin. I appreciate it.
Wait, can you share your screen?
Shahar is going to be sharing the screen.
Oh, okay. All right. I was like,
no problem.
Okay, sure. And by the way, while they're setting up their system, there is a poll where you can vote for your favorite startup that page so far. So far, eBumps is winning. I'm personally cheering for you guys. eBumps, go forward.
All right. Hi there. Can you hear me? My name is Shahar. I'm joining Chad today.
Yep, we can hear you, Shahar.
All right, kick it off, Chad.
Thank you. Thank you, everyone. Heighten Sifter is about to disrupt a $40 million keef extraction market. In just 30 seconds, the Heighten Sifter gives consumers easy access to 10 times more ready-to-consume keef than they're getting from their grinder today. I'm Chad Johnson. This is Shahar Marone, CMO, and we're here to show you the how and why Heighten is about to revolutionize the cannabis concentrate landscape.
All right, thank you, Chad. And like Chad said, what we're talking about here are those beautiful little crystals on the edges of the leaf there that you see on your screen. That is keef, also known as pressed hash. And here we are in this golden age of cannabis concentrates. Everybody knows that cannabis is booming. Concentrates is a booming slice within that. Its growth actually is outpacing the overall cannabis market, looking to quadruple in the next 7 years or so. And overlapping with that is also an extraction market. There are more people that are extracting concentrates at home and commercially, and that is around a $40 million market as well. And we see keef as being a really crucial part of this right now. It is actually the OG concentrate. People have been using it for thousands of years, but we also see it poised as the next big thing. You'll see here that we rely on a lot of data. Our backgrounds in media and marketing gives us an appreciation for and access to a lot of data. We see keef as that next big thing. In the words of the great Wayne Gretzky, we don't want to go to where the puck is, we want to go to where the puck is going. And why are we so confident in that as a growth area? Well, it's because of these people here. There are about 5 million or so what we call cannabis connoisseurs. And these are people that are affluent, they're educated, they are already spending around $200 a month or more on cannabis products. These are people that may have been using for a while or are relatively new, but they're already at a place where they're getting bored with leaf, especially in areas where legalization is happening. They're starting to explore new ways to consume, more infusions and extractions. They're just generally curious people that are early adopters. These are the people that started the home beer brewing movement, 15 years ago. So what we're looking at is capturing this audience because these are people that when they try keef, they love it. The problem with keef isn't the experience, but rather how accessible it is. Keef is something that not many people know about, and it's a bit of a pain in the ass to get right now. But that's what Heighten is solving. This here is our machine, the Heighten Sifter. It's the first motorized dry sifter designed for the home. So this is the device that is crafting elevated experiences for consumers. It's the type of thing that's never been in the hands of consumers before at this level. This is something that gives people the power of control, the ability to pop open the lid, throw in their leaf, press a button, and you get in about 30 seconds, you sift off those beautiful keef crystals, and then people can do what they like with it. They can customize and personalize how they want to feel. There's a lot of precision to it as well, which is very appealing to people that want to measure it or who are medical consumers who like to cook. But there's a lot of creativity. Also, it just makes people's cannabis go further. It separates the keef from the leaf, which has a bit of a multiplier effect as people can combine in different ways. There's the speed benefits, and it's just so simple and easy to use. You can see that it's designed to basically be like a kitchen tabletop appliance. It looks nice, the design is clean, and it's using quality materials like you've never seen before in this market. It's about the size of a toaster, but a little bit shorter. And the real sweet spot about this thing is the shake and vibrate technology. That's what makes all of this possible.
That's right, Jahar. It's because of that patented shake and vibrate technology. It creates such a violent motion. It will enable consumers to extract without the aid of any ice, water, or chemicals.
That's right. And so you see here, we see its place in the market. There's a gap right now. There are these industrial machines you'll see off to the left. The idea that these are things that usually just commercial organizations have. They cost thousands of dollars. They're all about volume. But they're these giant clunky industrial machines. And then on the right, we have, some devices for the home, some bubble extractors, manual sifting. These are things that are sometimes a little cheap and flimsy, but more importantly, kind of a pain in the ass to use. And as a result, many people either don't use it or they just don't even really know about it. But here we are, this is a $40 million market, as we noted before. We have the sweet spot in between where we can get that super quick yield in just 30 seconds. It's competitively priced and even it doesn't even need any solvents or chemicals. We also, by the way, have a commercial model in development for 2021 because we see once we have this model, we see no reason to go after both markets. That's where the volume is.
And as we look to the future, our vision is really to grow Heighton into a world-class lifestyle brand grounded in scientific research who exists to create a positive impact on the cannabis culture.
That's right. We are a company with a cause. We have a reason behind our founding, and we're already partnering with leaders in the community. And we have this vision for not just a product, but a brand with line extensions and accessories and custom experiences and all that. We are already getting plugged into this community. We're really encouraged by what we're seeing so far. So this takes us to where we're going. Right now, we've bootstrapped this thing. This has been 4 years in development, and we are right now, you're catching us an exciting time where CAD drawings are going off to start manufacture. Our website launches next week, and all we need is a $225,000 investment. We see ourselves in the black next year and really rapid growth in the coming year. So equity opportunities for those who get in early, and that'll help us launch.
We really believe that Heightened Business is a Ferrari, and it's because we've bootstrapped for 4 years, because we have a minimum viable product, the right tools and people. All we need is gas money, and together we can be on the road to profitability in 2021. Thank you.
Perfect. And right on time, I was about to cut you off again, but you've done it. So here it's time for us to move on to the questions. So first question is from Faith Klebacha. Sorry for pronouncing your name wrong. So question is, you said you can be in the black by 2021. How will you roll this out to achieve that?
Yeah, that's a great question. It's not easy for a company to make a profit its first year. But love that you asked that. We actually have all this detail in an appendix, which we can talk about with people later. But we have a very detailed rollout plan that covers both manufacturing and also promotion. We have major milestones, like in December, we will be at MJ BizCon, and these things are already in motion. And we have these ideas to also scale. What do the investment dollars allow us to do? It just allows us to keep hitting those milestones. We've actually already gotten enough to hit to where we are today. And this allows us to just scale. But all that investment goes right back into the business. We're going to develop the commercial model right afterwards and keep going from there.
Perfect answer.
Adding to that, with a 180% profit margin on each machine, as pre-orders start coming in this fall, we're able to start reinvesting in the business immediately.
Perfect response. And next question is from Aaron Wolko. What's the pricing of the commercial model?
That's a fantastic question. We're targeting the price somewhere between $3,000 and $4,000. This is based on primarily Pollen Master, who is a direct competitor. Where we see real value is compared to like a vibration sifter, which can run as high as $60,000. We can process, we based on performance of the consumer machine, we project to be able to process up to 60 pounds an hour of material, which is 10 times that of any competitor on the market.
Perfect response. And we just ran out of time for the Q&A section. For all those who wanted to ask a question but didn't get a response, there is going to be a networking session pretty soon, so hold on and be ready to ask your questions. By the way, before we move on to the next speaker, the poll is still up. So if you really liked some of those companies that present just now, definitely vote, because I'm pretty sure we're going to give some kind of nice gifties to the winners. So if you want to be nice to those companies, please go on and vote. Now we're moving on to the next question, and thank you guys for showing up and for giving us a good pitch in a really timely manner. Really appreciate it. So next speaker is Galliano Tiramini. Sorry if I pronounced your name wrong, but he is the business development manager at Boxable. So Galliano, I'm sorry. I'm sorry for pronouncing your name wrong. Take it off.
Hey guys, my name is Galliano and I'm here in Las Vegas, Nevada. My company Boxable is starting a large modular house factory, but we have a few twists from traditional modular. We basically set out to create a new type of building that can actually be compatible with factory mass production so that we can enjoy the benefits of assembly line principles and automation and robotics, the same benefits we enjoy in all our other modern products like iPhones and sneakers and cars. We want that to translate over to housing. So let me share my screen here. There you go. Can you see my browser?
Yes. Yep.
Cool. All right. This is just a page on our website showing our initial product. Essentially, the first problem we had to solve to translate housing into efficient factory production was the shipping issue. Currently all the other competitors are shipping large wide loads. It's very inefficient, it's very expensive, and it's really a non-starter. And I think the reason why factory produced housing has kind of failed to gain market share. Most housing is built slowly, one at a time on site, and we want to crank out thousands of buildings in a mass production style factory at a rate and a quality level and a cost that no one's ever seen before. So first problem we solved was our units ship as a highway legal load, 8.5 feet, then unfolds to 20 feet. Everything's still finished in the factory. So even though we're folding it up to this truckload, we're still finishing everything in the factory, kitchen, bathroom, everything. It just kind of sets up on site in about an hour. So what we want to do is we want to mass produce room modules that stack and connect to build different buildings on site. Here's a little example of how the transportation solution works. After we figured out that how to ship these, we moved on to how we're actually going to build them. We didn't think that the traditional lumber frame method that everyone uses in North America was appropriate for the factory. So we re-engineered the whole building module to use different materials that we think are going to be way more compatible with robot arms and automation and the factory processes. So now we've kind of dramatically simplified the whole building shell and the whole building structure. And the goal here really is to create a system where we mass produce standardized room modules that then stack and connect on site to build any custom building. So we think we can build 90% of buildings on the planet, anything from the little casita product that we're starting with up to a large multifamily. We've also engineered it to withstand the various environmental conditions all around the world. So we think we can build these buildings on 90% of the planet as well. So here's an example of some room modules that we might standardize and mass produce, and then those will stack and connect on site to build a custom building. So right now we are still at an early stage. I'm sitting right now in our warehouse where we've built a few of these units, and we're now getting ready to scale up to build a real manufacturing facility. So we have like manufacturing equipment incoming and getting a lease signed on a larger building, and we're going to be getting that going in the next few months. This is the initial product that we're going for. It's the smallest room module in our system, fitted out as a studio apartment. So this is a little casita. We're going to target this towards the California backyard housing market, which is new and rapidly growing due to changes in laws there that allow a backyard house in every single backyard in the whole state. And laws like that are actually spreading around the country. So it's a great place for us to start. We're here in Nevada, and we're going to be shipping these over to California and take advantage of that very high cost market. Just last week, we got an initial order from the government. So that's a $10 million contract to produce a bunch of these homes. So our timeline right now is we're gearing up to set up a bigger factory here and deliver about 150 houses to the government within a year, about 11 months it's due. And we currently have a capital raise ongoing here on WeFunder. We dramatically oversold. This was started a few months ago before we got this government order and some other orders we have. So now we're actually transitioning from this capital raise, which is going to bring in several million into a much bigger one for a bigger plan to start out with a bigger factory. We have a whole bunch of different patent filings. We've kind of announced this product earlier this year. We've got a dramatic amount of interest for it. Thousands of people have signed up to purchase one. About 18,000 now we're up to. 2,000 of them have paid a small deposit. And yeah, these very exciting. Thank you. Happy to answer your questions.
Perfect. I just showed you that you have 1 minute left, but you finished it up earlier.
I thought I had less time.
Nope. I show my phone when there's just 1 minute left, for the future speakers. But we have one question from the audience. By the way, great progress. Congrats on that contract with the US government. That's huge.
Yeah,
so first question from Aaron Wolko is, awesome. How far off are you from building your first multifamily project? And second question is, how much will it cost to develop for 50 units?
You know, we're planning on just starting out with this little casita product because we have so much demand for that. I don't think we're going to be able to even satisfy it with a monster factory here for the next several years. Those room modules, the initial one, they do stack and connect. So you can stack them several stories high. You can connect them, arrange them. Later on, we'll roll out bigger room modules. So this initial one is 20 by 20. Then we'll roll out bigger ones up to 20 by 60. And then once you have those bigger ones, you'll be able to create majority of building types. But initially, we're going to be focused on delivering this first orders to the government. Hopefully deliver that within 11 months. At that time, have we worked out all the kinks and then open it up to the general public for these casitas initially.
Awesome, perfect. And the next question is about debt financing. So same question from Aaron Wolko, by the way. Question is, are you only accepting equity financing, or do you plan to raise through equity, through debt as well? That's actually, I think, really
you know, if you're interested to talk more about that, please email me or email hello@Boxable. We are going to be borrowing some money now that things have kind of changed, and we have this big government order, so that we can get some money in right now before our next offering is prepared.
Perfect. Here we don't have any more questions, and thank you first of all, Gail. Well, how do you pronounce your name again? Sorry.
Galeano.
I'll just say thank you. Thank you for presenting. And here we're going to move on to the next speaker, who is Gina Fine. While she's setting up the presentation, I just wanted to remind you to vote on the first poll. So far, eBumps is winning. Actually, never mind. It's too late to vote. But as you may see, that eBumps won. I was cheering for them and they won. Congrats, guys. We'll get back to you on the presents or gifties later on. So Gina, take it out from here.
Hello, can you hear me?
Sound is crystal clear.
Great. Thank you all for hanging in there today, all the way to our presentation. Really appreciate that. My name's Gene Fine. I'm the CEO of Soulful Provisions. Lou Mann is also here with us. He's our COO. And let me start with why we're here in the first place. When we were thinking about starting this business, we had to consider the times that we're in. We're in a very unique time. And so what we wanted to do was create an entity that provided stability and then put opportunity on top of that stability. So where would we go? Where would we look for in times like this? Well, as an inventor with 143 US patents and having functioned in many industries, part of our job was to foresee what's going to happen in the future. What we see is happening in the future over the next year to year and a half is some instability, similar to the instability that we've had this year, although we do expect things to improve. So with that in mind, we went after a very specific special purpose acquisition corporation called Soulful Provisions that we started. And this acquisition vehicle is geared towards distribution, and specifically grocery distribution. During the pandemic, we've seen that grocery has been impervious to large swings, unlike many other industries, and in fact, grocery has thrived. The two initial grocery distribution companies that we're acquiring are both extremely stable businesses. Combined, they have been stable for more than 43 years. One is on the East Coast that services New York and New Jersey, and one is on the West Coast that services Los Angeles. Both of these companies are ripe for expansion. They've been run by the same CEOs, both very competent, and both of whom are staying with the company to continue helming their businesses for the next 3 years. These guys have been held back because they have not had the growth capital. There is a very simple organic growth opportunity to be had by both of these businesses by just adding capital and enabling the two entrepreneurs running these distribution companies to expand in a very organic way to their existing distribution base. And that's very exciting to us. The other thing that's exciting to us is that each of these distribution companies hold very easy opportunities to expand vertically. For one of our distributors that we're looking at, Christian Delivery Service, they currently operate in one facility in New Jersey. They have the opportunity through the partnership that they have with their parent company to expand their distribution to multiple markets, as you can see. These are open offers to expand that they have currently not taken advantage of because they don't have the expansion capital. We can clone this business in multiple markets, resulting in significant growth year over year without changing the business at all, just replicating it. The same is true for our distributor in Los Angeles. They currently distribute to 800 accounts, but they have national vendor accounts with Safeway, Albertsons, Vons, as well as Kroger, which owns Ralph's and other grocers. Plus, they have high value grocery accounts like Bristol Farms and big box accounts like Target. These are national vendor numbers. So it's very easy for us to open up another distributor from scratch in another city and enter that market with those vendor accounts already existing. That is an extremely, extremely valuable opportunity to have. Our team may seem too big for this opportunity at first because these companies combined have done $12.5 million in business in the last year. Our team, Lou Mann, John Madison, Rod Greider, myself, we are used to handling distribution businesses that are significantly bigger than this. Lou has handled when he was president of Capital Records, over $750 million a yearly business. John Madison did up to $1.4 billion when he ran Polygram Group Distribution. Rod Greider, our CFO, is VP of Accounting for Apache and Occidental Petroleum. Oversaw deals that were well in excess of $1 billion every year. So our team is extremely suited for the distribution business, extremely suited to grow that distribution business. One of the things about distribution is that it is traditionally a low margin business, and that is no exception here. So how do we boost those margins? Well, we do it two ways. One, we look for products that are already in these distributors' realm of distribution, and we search out those products that are high value and low weight. Weight is important when you distribute because it has to do with how many products you can get in a store and how much that will cost in terms of
Just
the
FYI,
transportation.
you ran out of time, so maybe you want to pass it all to Low Man in case he has anything else to add, just real quick because zero time left.
Sure, Lou, would you like to add something?
No, I just think that this opportunity, we didn't really get to really talk about the whole meat of it, but this opportunity allows us to put additional product SKUs into this distribution system, specifically CBD products, other things like that. So this is an unlimited distribution network that we are building. So that's pretty much it.
Exactly, and it's really a network that's founded on stability and then putting opportunity on top of that. And as you can see from these numbers, we're looking at substantial percentage year-over-year growth simply by adding capital and existing products to the mix. Thank you very much for listening to the presentation today. I really appreciate it.
Thank you, and thank you for being on time. So I don't see any questions from the audience, and to be quite honest, I cannot come up with one myself. It's just I don't have enough expertise in this particular field. Just blank mind right there. But for all who have questions and just didn't get a chance to ask those, the networking session is coming up really soon. The link is already up there. Don't click it yet. You have we have two more panelists, right? Two more presenters who are going to present their companies. So wait for those two, and then we'll move on and network a little bit. So thank you guys, and have a good day. Now it's time for us to move to the next speaker, Dennis Schmidt. He is the CEO and founder of Neurotech Corp, which is a startup manufacturing company that produces the functional impulse training and rehabilitation. That's a complicated name of a system, and a wearable textile providing intervention through a secure IoT integrated biosensor platform. That's a lot of complicated words. So Dennis, take it off from here. I hope you can pronounce those words better than I can. So good luck.
Thank you so much for the introduction, and I'll make it a lot simpler. It is actually quite complex, the science behind it, but we're going to simplify it. The fitter system, we could just call it the fitter system. You want a fitter life, a fitter lifestyle. Functional impulse training and rehabilitation. We are a wearable providing intervention and diagnostics, the only wearable, smart wearable device that does this. We are a wearable textile providing intervention, meaning that we actually control the muscles, the fatigue, the resistance of the muscles, while an IoT integrated biosensor platform. Our suit is a platform for biosensors. It doesn't matter what biosensor. Everybody's out on the market right now making biosensors for various things. Our suit is designed and already has the leads in place where we can implement anything from a sweat analysis biosensor, EKG sensors, and various sensors. Any sensor on the market, we can incorporate it into our suit, currently offering EKG and biosensors in it with our current model. Our suit has 20 pre-placed electrodes that provide electromuscle stimulation, both NMES, neuromuscular electrical stimulation, and FES, functional electrical stimulation. Our control box attaches to the suit, and it's constructed of lightweight PCB board. Our software is designed with Linux. It's Apple and Android platform. It's easy, user-friendly. We do have competitors on the market, globally. If you can see, I'll blow it up a little bit. Our competitors are not really there. The flip phone, we are the iPhone or the smartphone. They're limited with wires. They're cabled to a machine. They have a vest that has to be taken off and put back on, and they don't have the sensor platforms. They just provide the intervention. We have the lowest price point on the market. We have the most hygienic product on the market. We have been contacted by a multiple of competitive products, competitors that are using competitor products so that they can switch over to us in the post-COVID market. We have over 120 people asking to switch over to us, 120 facilities. Our unit level economics, we have really focused on getting our manufacturing up to the point where we are the lowest price point on the market. Our commercial units are being sold at retail. Our closest competitor's price, their wholesale price is higher than our retail price. We've used our minimum viable product in multiple locations. University of Tampa did a human performance study. Big thing out of that is 2 20-minute sessions in our suit. Half of the hockey team used our suit for 20 minutes twice a week doing functional exercise. The other half of the team went to the gym. After 4 weeks, we had the same gains in our suit that the other half of the team was doing in the gym at 4 to 5 hours of training per week. Biggest thing is we have a very large bone mineral content of 1.7% increase and a bone density increase of 9.68%. We started, we also used our product in a back in the game therapy, a physical therapy practice in New York. They are a wing of the hospital special surgery. They send their special cases there, their hard cases, and we've had magnificent results there. And then we've had hundreds of patients that we've used our product. I'm the CEO and founder. It was founded because of my own injuries. I was prescribed opioids and ibuprofen. I'd had to do 3-4 hours of stretching a day just in order to maintain a functional lifestyle, not even a good lifestyle, just to be able to do the minimum things. Years of traveling, I found the science. I've made the science better. I brought in an amazing team. I have a degree in electrical engineering. I'm a serial entrepreneur. The team, Jonah is a marketing genius. She has helped launch multiple brands, including Nike Sports Camps, multiple franchises globally. Michael Finkelstein has 15 years in education and research and development. Mike Borowski, Frank Grippy, Command Sergeant Major in the Hall of Fame for Special Operations Command. Lisa Hawkins, 34 years with the FDA, is doing our QMS and regulatory audits. Dr. Maltezo ran Nobel Prize winning labs and our head scientist. Monica Yoshi is our head physical therapist who's used our product. And Josh Kotler, who was the former director of what's the name of the company? Of sales at Boston Scientific, helped launch company.
Wait, Dennis, I'm just going to interrupt you real quick. Your presentation is not showing, it's just black screen. Is it supposed to be like that?
It's not showing?
No, it's just a black screen right there.
Let me escape out of the full screen and see if you guys can see it.
Still black screen. Oh, okay, now it's working. Perfect.
Okay. I just took it out of full screen. We are part of the USF Incubator Program. We have CAI, which is a renowned regulatory and manufacturing company overseeing our manufacturing. And our manufacturing and development is with Verity Medical, who does multiple medical devices that are FDA approved, both class 2 and class 3. We have huge markets in the fitness, defense, and medical field that we're going after. We have 6 million in LOIs outside the USA for non-FDA countries, another 6 million within there. Basically the fitness system in the fitness market provides the most efficient utilization of time, analytic feedback, versatility in any style of training. You can do CrossFit, you can go running, yoga, fitter, HIIT training in the suit, and it just provides a more efficient training. We are currently setting up our roadshow for the defense. We've had Defense Works Chief Technology Officer give us the green light. We're going to the Pentagon, Walter Reed, the Intrepid program, Special Forces Operations Command, and showing them our product to start integrating it with them. Medical, we talked about that bone density. We're going into some long-term studies and getting some grants to do these studies in order to look at osteoporosis, Parkinson's disease, and neuromuscular re-education. The analytics will outperform all of them. We basically have built the most secure analytic platform on the market for commercial use. With federated learning, we keep everything in our trusted computing. Our upward trajectory is built from the bottom up, meaning that we're going with our LOIs. We have 12 million LOIs, and as we grow, we'll be looking at around $70 million a year in annual sales. Our unit level economics that we talked about, our lowest price point We have a
I
3-year.
want to cut you off here. Can you rush to the ending of the presentation because you ran out of time?
Oh, I'm out of time? That was a quick time. Okay.
Yeah.
All right. I went fast ahead. 3-year sales projections. We have our timelines. Hopefully we can share this out with anybody that wants it. We have intellectual property, patents. We have investment traction. We were trying to raise 1.2 million. We have 400,000 committed. We're trying to raise 800,000 to date. Our exit strategy will be to remain public, IPO, or merger and acquisition. And each one of our verticals are built in sister companies so that we can sell one off while maintaining control of the other ones. I'll let you go to questions at this point. I had a nice video, but we don't have time for it.
So first of all, great traction. Really, congrats on, again, another government interaction there. Really looking forward to hear how that one plays out. But my question is, what's the price of one of those suits? So what's that?
We have multiple different products. We have commercial units and we'll have personal units. The personal units will be the Peloton of fitness type model. We're actually working with some people and have some interest in other companies to already look at this. But the personal unit will be $999. If you want to buy it outright cash, we have banks lined up to do financing so they can get it as low as $19 a month.
Nice.
That will include the online platform for the first 6 months to follow along with the training programs. We've identified 6 major trainers in different various formats, like a major #1 Tai Chi instructor in Korea, cycling in New York. They can go online and do all these with them.
Perfect. So I don't see any other questions in the chat or in the Q&A section. So thank you, Dennis. I don't have any more questions here as well. So thank you for your presentation and have a good luck with your company. So here we're moving on to the next question, to the next speaker. And this is our last speaker for the day. And then we'll move on to the networking session where everyone can have a chance to chat with their favorite company. So be prepared to click that link. But now we're moving on to John Perilli. Sorry. John Perilli is the managing director of CEO Technologies. He has 20+ years in the financial industry. He's the director for a global hedge fund startup and has an MBA in finance. So John, please show up and take the stage. While we're waiting for John, I'm just going to repeat that we're going to share a link right after his presentation. That link is going to lead you to the networking event.
How is that?
Yep, the sound is on. We can see you. Just share your screen and take it out.
Great, thank you very much. Hello, I am John Perilli and the Managing Director of CEO Technologies. 1 second. And get my screen up here. Great. Sorry for that. Healthy buildings are now a necessity. Owners and property managers can improve the health and safety of their building by leveraging the power of IoT. However, traditional IoT deployment is complex and has a low success rate. CEO Technologies is a disruptor in providing the next generation of IoT that is simple and easy to execute. As a result, we have successfully deployed our solutions for industry leaders such as JLL and Travelers, and have partnered with multiple system integrators to resell our solutions. The problem we face is that the vast majority of buildings cannot determine if they are healthy. IoT can solve this problem, but the traditional deployment is difficult and involves at least 5 components that do not communicate well. A Cisco survey stated that 75% of IoT projects fail because they are too difficult to execute. Our end-to-end IoT enablement platform simplifies the language between different components. Unlike the common deployment process, our solution eliminates the unnecessary steps and makes IoT much easier, leading to a higher success rate. Our solution consists of 3 elements: self-developed hardware with a built-in network that can control and unify data from different sensors and transmit to the cloud, wireless multi-regional network connectivity that is specialized for IoT, and middleware that is cloud-based and can integrate into multiple IoT platforms. Our software framework acts as a bridge between sensors and our IoT platform. We have been improving this process for 3 years, which positions us as a leader in sensor and platform development. How it works: install, connect, integrate. Installation is easy. Snap in hardware, collect data. Connectivity is wireless, and we integrate into a cloud platform or existing VMS. We provide a single point of contact for our customers and eliminate the need for multiple vendors. The snap and go technology leads to a rapid deployment in days, as opposed to weeks, months, or even years. Since there is no additional setup required, our solutions save time and money. We are a one-stop shop. One call, one contact, one invoice. Our proprietary hardware includes over 30 sensors that can be mixed and matched for multiple uses. This gives us a competitive edge in providing flexibility to build solutions that can benefit the end user. Our most common solutions focus on indoor air quality. Our Edge Echo has 9 embedded sensors that can set safety thresholds. We can track levels. We can send alerts when air quality levels are high and puts tenants or guests at risk. Temperature control, predictive maintenance are other solutions we have. How are we different? Unlike the common do-it-yourself solutions from our competitors, we make the process simple. Other solutions require a steep learning curve, weeks to months of preparation, a long time to completion, and even the use of multiple vendors. Our primary market is Class A office buildings targeting Chicago, Hartford, New York, and Hong Kong. The total market size is about a 21 billion market value. Through these 3 US cities alone, we have access to 10% of the entire US market. We also target industrial and warehouse facilities as well. We have 3 sources of revenue. Our devices are sold as a one-time cost ranging from $125 to $490 per device. We provide connectivity and middleware that is subscription-based, ranging from $15 to $35 per device per year. We also offer optional IoT infrastructure for clients who require a dashboard or additional services for an annual fee. We established in Hong Kong selling our solutions in the APAC region, completing 2 major IoT projects for the government, setting a new standard for the IoT market. To date, we have sold over 2,200 devices to 20 enterprise customers with a 90% retention rate on subscriptions. In the past year, we have $400K in revenue, bringing us close to break even. In 2020, we completed Upward Labs Accelerator Program in Hartford, Connecticut. We established as a US Delaware C Corp, using Hartford and Chicago as a working hub. We ran 7 working pilots for 7 different applications and achieved a 100% success rate. After a slowdown due to COVID-19, we have re-engaged with our pilots and are currently converting them into paying customers. Our sales strategy targets both direct and indirect customers. For a direct strategy, we target owners and management of Class A properties in the US. We also pursue large infrastructure government projects, which have a higher ratio of sensors per job. For an indirect strategy, we work with partners and system integrators that can use and resell our devices to their new and existing clients. We have leveraged our working relationships in the APAC region, such as our partners such as Belimo and Streetwide, and have partnered with T-Mobile's IoT SIM provider, Simon IoT. Growth projections in the US, we assume deploying 50 sensors per job at a 15% month-on-month new building growth rate. Using this metric, we project a revenue of 2.5 million in year 2, 8.5 in year 3, and 31 million in year 5. Andrew is the CEO and co-founder. His responsibilities include global business, technology development. Inky is our COO and co-founder, responsible for operations, manufacturing, and hardware development. I am the managing director and responsible for US business development operations. Overall, we are a team of 6 with expertise in hardware, network, and cloud technologies. We have great experience in developing sales partnerships, channels, and working with enterprise customers. The investment opportunity. We are raising money for the US expansion that includes a US team consisting of technical, development, and sales staff to service and execute our target areas and meet our projected growth. Due to the changing environment with COVID-19, there will be more emphasis put on healthy buildings. We are providing an opportunity to invest and be part of the next generation of IoT, smart buildings, and healthy workspace. We are SHIO Technologies, committing to creating efficiency through our IoT platform. Thanks.
Perfect, and right on time. Thank you for that, John. So here, the poll just went up. So while we're giving some final remarks, and by the way, remember how I said that after this presentation, we're going to move on and jump onto the networking session? Well, I was wrong. We have also closing remarks from the organizer of the event, Tim, and also our sponsor. And at this point, I, as a master of ceremony, will say goodbye to you because there is no more presentations, and see you at the networking event. By the way, just a personal self-promotion here. I'm the host of Fundraising Radio as well. So if you want to understand how to raise funding for your early stage startup, definitely take a look at it. But now we're moving on back to our sponsor, Yitz Jordan, the CEO of TribeHerald. So Yitz, take it off and have a good day, everyone.